To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Tom Keene and Jonathan Farrow enjoy each other's company.
Most of us don't speak Mandarin. John, do you speak Mandarin?
I do not speak Mandarin.
I just wanted to check that.
Almost as much as they enjoy grilling economic experts.
When this is over, do you bounce back or is there a lasting weakness to it?
Which means that you will enjoy listening.
If things get worse, we're ready to do more.
Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Are you looking for senior care for your mom or dad but don't know where to start? Hi, I'm Joan London with The Place for Mom. Nobody knows your parent or loved one better than you, and nobody knows senior living better than the experts at A Place for Mom. It's a free service, and we've helped thousands of families find the right place for their mom or dad. There's a place for answers, A Place for Mom. Call today.
Call A Place for Mom at 1-800-391-1755. That's 1-800-391-1755.
Influential conversations from Bloomberg Television. Here's Paul Allen.
Now, despite President Trump's claims that his administration is ready for the coronavirus in the U.S., there is mounting concern that the government is grossly underprepared. So let's take a look at the situation now with Dr. Caitlin Rivers. She's professor of epidemiology at the Johns Hopkins Bloomberg School of Public Health. So, Dr. Rivers, thanks for joining us. What is your assessment of U.S. preparedness for this?
I'm pleased that diagnostic capacity in the United States has expanded this week and will continue to expand in the coming days. I do think that will mean that we will identify more cases in the United States, which might feel alarming, but it's really us just catching up to the current situation and getting a better understanding of that epidemiological situation.
Are enough tests available?
Yes, they are coming online. About half of state and local public health testing laboratories now have capacity to test, and I understand the rest of them will be coming online this week. That will bring us to about 10,000 tests a day if things run smoothly.
What's your best guess? How many Americans do you think actually are infected by this virus that we don't know about?
It's impossible to say, and that's why it is so important that we have testing capacity. And that's why I think we will see more cases in the coming days and weeks because there has been transmission likely happening that we haven't observed.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and NYMEX crude oil now on the rise. We are getting word that OPEC ministers have agreed to cut production by 1.5 million barrels a day in response to the coronavirus. That's according to delegates. Although talks in Vienna did not include Russian Minister Alexander Novak, who yesterday had refused to support such a move. NYMEX crude oil is up 0.9% right now at 40 cents at $47.19 a barrel. Brent is up 0.9% at $51.58. Futures are lower this morning, giving back a chunk of yesterday's surge as investors assess government efforts to confront the coronavirus. Right now, S&P futures are down 54 points. Dow futures are down 413. NASDAQ futures down 154. The DAX in Germany is down 1.3%. 10-year Treasury up 24/30 seconds. Yield 0.97%. The yield on the 2-year 0.62%. COMEX gold is up 0.3% or $4.50 at $1647.50 an ounce. The euro 1.1163 against the dollar. British pound 1.2909, and the yen is at 106.97. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, the U.S. death toll from the coronavirus has risen to 11. California officials northwest of Sacramento say an elderly man who tested positive for COVID-19 after returning from a San Francisco to Mexico cruise has died. Japan says Chinese President Xi Jinping's state visit in April has been postponed due to the virus, and Switzerland has reported its first death from the coronavirus. Chief Justice John Roberts is criticizing as inappropriate and dangerous comments Senate Democratic leader Chuck Schumer made about Justices Neil Gorsuch and Brett Kavanaugh. Schumer, speaking outside the Supreme Court about a key abortion case, told the justices, "You won't know what hit you if you go forward with your awful decisions." In the NBA, the Knicks lost, the Celtics won, the Warriors lost. In the NHL, The Capitals lost. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
Michael, thank you. It is coming up to 6:20 on Wall Street, live from the Bloomberg Interactive Brokers Studios. This is Bloomberg Daybreak, and we welcome this morning Matt Maley, equity strategist at Miller Tabak. Always good talking with you. I wonder how you take advantage of the volatility in this market with all the swings we've been seeing over the last few weeks as the coronavirus headlines continue to dominate.
Yeah, there's no question. I mean, the volatility is just off the charts, and we see these, kind of artificial moves. And one of the things we saw was yesterday, where the stock market opened nicely higher because of news off of on the political front, where Joe Biden replaced Bernie Sanders as the front runner on the Democratic side, and that was seen as bullish. But they really didn't get any positive news out on the coronavirus. And the key thing here, and that's important because that's really been the main driver for the market recently. And the thing is, though, yesterday when the market opened, the put-call ratio shot up. In other words, it shot up to 1.89 early in the morning. In other words, people were buying more puts. Usually when, and that was actually higher than the big sell-off we saw on Thursday and Friday. So people got more bearish, bought more puts, and then as the market rallied, as we moved through the day, those shorts got squeezed. And so it was kind of an artificial move higher. So, but in the other markets, gold didn't sell off at all. The bond market, of course, yields went to new lows, below 1%. Credit spreads didn't back up much at all. So most of the rest of the markets told us the coronavirus is still an issue, and that's why we're seeing the sell-off this morning.
Are you seeing that that this market has further to fall then?
I think it probably does. I just think mostly because of the uncertainty involved. I mean, back when we had uncertainty surrounding trade last year, we always seemed to have deadlines. President Trump would say, "Hey, if this doesn't happen by this time, we're going to raise the tariffs or et cetera." Sometimes he pushed those deadlines out, but each time, at least we had a date where people would say, "Hey, we're going to have less uncertainty by this point." Right now, we have no idea when this uncertainty is going to end, and that doesn't mean it's going to be a horrible bear market or anything like a repeat of what we saw 10 years ago, but it does raise the risk that the market could fall further.
Well, what could the market be looking for in terms of fiscal or monetary policy, perhaps bringing in some sort of stability? It seems like the moves that have been made so far by central banks and governments have only added to the volatility.
Yeah, I mean, we definitely want to see more on the fiscal side of things. Right now, it's funny because I think President Trump, it seems to be I don't mean to make a political statement here, but back in 1992 when George H.W. Bush lost re-election, his people said, "Don't worry about the slowdown in the economy. It'll turn by the time the election comes." Well, it never did. And it seems like the Trump administration is taking the same tactics. Like, don't worry, this thing will end before the summer, and therefore the economy will bounce back, and we don't have to worry. Well, if it doesn't bounce back, he's got a problem. So we need more fiscal stimulus. And on the one hand, number two, on the monetary front right now, we know that the cutting rates isn't going to help cure the coronavirus. What would really help the markets would be an extension of the not QE program. And so far we haven't gotten that.
Are you expecting more easing this month? Of course, the Federal Reserve is meeting in less than 2 weeks here.
Well, I think it'll really depend on it'll be market dependent, but not so much stock market dependent as bond market dependent. I mean, when they did their big pivot in early 2019 after the fourth quarter correction in 2018, it was really the credit markets. They started breaking down a little bit, and that's what really forced them to change. Credit spreads are widening back out again. If that continues, I do think they'll cut again at the March meeting.
Only about 30 seconds left here. Are you advising your clients to reposition as all this continues?
Well, we had been quite early on telling people to raise some cash, and I think people want to be doing that on any kind of bounce on a near-term basis. But the key thing right now is to have a plan in place in advance, right now. Don't panic. Yes, don't panic, but that doesn't mean do nothing. Put a plan in place so you can take advantage of the situation if the baby gets thrown out with the bathwater, and some of these really high-quality names with great balance sheets go down even more.
Matt Maley, equity strategist, Miller Tabak. Always great getting your your insights. Thanks for being with us this morning on Bloomberg Daybreak. Want to pass along this red headline that just crossed the Bloomberg terminal. HP has rejected an unsolicited exchange offer from Xerox. The company says Xerox's offer fails to reflect the full value of HP's assets and meaningfully undervalues HP. The company says its standalone plan positions HP for significant value creation. We'll have more throughout the morning here on Bloomberg Radio as we continue to watch markets fall, particularly in Europe and the U.S. S&P futures lower by 61 points now. Dow futures down 459. NASDAQ futures lower by 171 points. 10 years up 26, 30 seconds, yield 0.96%. This is Bloomberg.
This is a Bloomberg Money Minute. It's been a wild week and a real roller coaster ride on Wall Street, and today it looks like a big drop at the open after a surge for the Dow yesterday of almost 1,200 points. We had gains of 4% right across the board. But this morning, Dow futures down 450 points. The gains yesterday came after Congress authorized billions of dollars in coronavirus prevention monies. Healthcare firms rose the most in more than a decade as the weak performance by Bernie Sanders in the Super Tuesday primaries dented the threat of policies that would shake up the industry. Facebook has closed its Seattle office and encouraged employees there to work from home for now after one of the company's Seattle contract workers was diagnosed with the coronavirus. It's the first known infection within the company. Microsoft, based in Redmond, Washington, is also encouraging people to work from home. Overseas European markets are declining. Asian markets rose today. Gina Cervetti, Bloomberg Radio.
Message and data rates may apply. TNC and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
For up to 50% off a choice of floors and beds. For an extra 20% off selected ranges. For first-class fitting. Morning. For 0% free credit with no deposit. For a nice surprise. Ooh. For bringing home a bargain. For heaven at long last. Carpet right for life. Up to 4 years interest-free credit. Minimum spend applies.
Matt Letizia, what did you make of that performance today?
Well, it really was a game of two halves, to be honest, Jeff. Leicester came out in the first half really...
Letiz?
What's up, Jeff?
Run for it!
What the...
Move over, football. Cheltenham coming through. And Sky Bet are on the charge. With money back as actual cash, up to £10 if you lose on the first race of the festival. Sky Bet. That's betting better. Applies to first bet on first race at Cheltenham on losing singles and win part of each way singles only. Money back as cash, free bet stakes excluded, eligibility restrictions, T's and C's apply. 18 plus, begambleaware.org.
This ad is made from 100% recycled commercials. Just like Smart Water's
all new
bottles are made from
100% recycled
plastic.
What's that number again?
100%. Every Smart Water bottle is made using recycled plastic, and because it's still
100%
recyclable, the plastic will be used again
and again.
Smart Water, now in a 100% recycled plastic bottle. Label and cap 100% recyclable, but not made from recycled plastic. Yet. We're working on it.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
Fill the trolley with your favourite brands on rollback at Asda. A 38-pack of Fairy Non-Bio capsules was £8.50, now £5.75. A Lenore Gold fabric conditioner was £4, now £2.50. Big brands, small prices. Don't compromise. Asda. Save money, live better. Selected stores subject to availability. Lenore 1.925 litres. Ends 18th of March.
Take the next left, take a right, and you've arrived at your Vauxhall retailer, where you'll find the all-new Vauxhall Corsa. Test drive now and you can take advantage of a £500 deposit contribution with 4.9% APR representative. Book your test drive of the all-new Corsa now. Vauxhall. New rules Britannia. £500 allowance provided as deposit contribution on qualifying new Vauxhalls. Conditional sale and personal contract purchase only. Subject to status, T's and C's, 18 plus Vauxhall Finance. Registered by 2nd of April 2020. Search Vauxhall Test Drive.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak.
It's 6:30 on Wall Street. Good morning. I'm Nathan Hager.
And I'm Karen Moscow. We are just about 3 hours away from the opening of U.S. trading. Let's get you up to date on the news you need to know at this hour. U.S. futures are falling this morning following yesterday's big rally on Wall Street. And Bloomberg's John Tucker joins us with the latest. Good morning, John.
And good morning, Karen. After 4% surge in the S&P 500 yesterday, one thing is clear: volatility reigns. Risk assets are still whipsawing, with traders remaining on edge amid a rise in virus cases around the world and as many governments extend quarantines and travel restrictions. Matt Maley is with Miller Tabak.
Right now, we have no idea when this uncertainty is going to end, and that doesn't mean it's going to be a horrible bear market or anything like a repeat of what we saw 10 years ago, but it does raise the risk that the market could fall further.
The S&P 500 has rallied about 6% this week. It's 7.5% below last month's all-time high, and S&P futures down 2% this morning. Meantime, the U.S. House of Representatives approved a $7.8 billion spending package, and California declared a state of emergency. Buckle up. John Tucker, Bloomberg Daybreak.
No kidding, John. Thanks. As cases in the U.S. rise, coronavirus has stabilized in South Korea. Bloomberg Daybreak Asia anchor Brian Curtis has more from Hong Kong on the outbreak's key developments.
The infections in Asia appear to have peaked as they gain pace in the West. South Korea is testing 10,000 people a day and maintains a mortality rate of just 0.5%. California's emergency makes more resources available. The state had its first death on Wednesday. Elsewhere in Europe, Italy says it'll close schools until March 15th as its deaths jump by 28. And finally, Hong Kong confirms the first human-to-animal transmission, but it's not believed that pets can themselves infect humans. In Hong Kong, Brian Curtis, Bloomberg Daybreak.
All right, Brian, thank you. And we do have this headline crossing the Bloomberg. HSBC said to have found one coronavirus case at its London research arm. It has evacuated the research department and the floor has been deep cleaned.
And as we continue to watch the economic impacts of the outbreak, the International Air Transport Association is now warning it could cost airlines as much as $113 billion in lost revenue.
HP says it has rejected an unsolicited offer from Connecticut-based Xerox.
And crude oil's rising after delegates say OPEC ministers have agreed to cut output by 1.5 million barrels a day, though that is conditional on Russia agreeing to it. Checking prices now, West Texas Intermediate is up 0.25% at $46.91 a barrel. Brent is at $51.32.
And S&P futures are down 65 points this morning. Straight ahead, we have the latest world and national news. And this is Bloomberg.
All right, Karen, thank you. It's 6:33 on Wall Street. Let's see what else is going on around the world now. Here's Bloomberg's Michael Barr.
Thank you very much, Nathan. New Jersey is now reporting its first case of the coronavirus. Governor Phil Murphy, in a statement, says the man in his 30s is hospitalized in Bergen County after he tested positive for the virus. Murphy says local and state health officials are retracing the man's whereabouts and contacts. Global cases from the coronavirus outbreak topped 95,500, and the death toll rose to 3,285. That includes the first death in Switzerland from the virus. Vice President Mike Pence says all direct flights from all airports in South Korea and Italy are now being subject to multiple screenings before passengers board to come to the U.S. Pence also says all state and university clinics can now test for the virus.
Our objective ultimately, and quickly as possible, is to have tests made through these commercial laboratories and commercial providers that your local doctor, your CVS, your MedCheck is able to have a coronavirus test.
Meanwhile, Chinese President Xi Jinping's much-anticipated state visit to Tokyo has been postponed because of the virus. Democratic presidential candidate Joe Biden is pledging to unify Americans as he prepares for a potentially long primary fight against rival Bernie Sanders. Sanders says what they're doing together is unprecedented, and it's threatening the country's conventional political machine.
That is an establishment which is working frantically to try to defeat us. And there's not been a campaign, I think, that has been having to deal with the kind of venom we're seeing from some in the corporate media.
Some supporters of Sanders are calling on Elizabeth Warren to drop out and endorse her fellow progressive. Chief Justice John Roberts criticized comments made by Senator Chuck Schumer as inappropriate and dangerous about Justices Neil Gorsuch and Brett Kavanaugh. Roberts was responding to Schumer's remarks at a rally outside the court while a key abortion case was being argued inside. Longtime Democratic Texas State Representative Harold Dutton is in a surprise election battle against Houston City Council member Jerry Davis after a mysterious third candidate received 21% of the vote, triggering a runoff. Dutton says the problem is no one seems to have met or even seen Natasha Ruiz.
We've never seen them. We've never talked to them. They never showed up. They never had a sign. They don't seem to be a real person.
Dutton says he's considering legal action. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
Thanks, Michael. Coming up to 6:36 on Wall Street. Time for the Bloomberg NBC Sports Update. Here's John Stashower.
Nathan, 24 hours after that amazing win in Boston when they came from 21 down to win in overtime, Karis LeVert scored 51. Nets back in Brooklyn. They fell back to earth. Memphis Grizzlies, sub-500 team coming in, won 118-79. LeVert this time with 14 points, and Spencer Dinwiddie, who averages 21 a game, held to 4. He shot 1 of 9. That's Coach Kenny Atkinson.
These are the moments where you really, you have to embrace the adversity. And we're obviously disappointed and frustrated that we couldn't build off a great win. And, we're definitely frustrated with that.
Knicks were riding a modest 2-game win streak. They lost at the Garden to Utah 112-104. Julius Randle had 32 in defeat. Milwaukee still hasn't had back-to-back losses all year. The Bucks beat Indiana. Dallas topped New Orleans in overtime for Luka Doncic, 30 points, 17 rebounds, 10 assists. College hoops, good one in the Big East. Seton Hall had a chance to clinch the regular season title, but Villanova prevented it, winning 79-77. St. John's lost at Butler 77-55. A rare win for Fordham. Losses for Manhattan and Iona. LIU won by a point to advance in the Northeast Conference tourney. The season over for St. Francis, who lost by 1. Tom Brady asked about possibly leaving New England.
I know it's been a lot of patience for me, and obviously being where I've been for 20 years, it's been an amazing experience, and I don't know what the future holds right now. I'm just trying to be patient through this process, my first time going through it. And in the meantime, I'm going to spend a lot of time with my family over the next 10, 12 days, and we got a little vacation plan, which I'm looking forward to.
About to become a free agent, Brady did an Instagram chat with UFC President Dana White. With Bloomberg NBC Sports Update, I'm John Stashower. Nathan.
All right, John, thanks. This week's parade of retail sector earnings continues today with Costco announcing results. Bloomberg's Larry Kofsky reports.
The holiday quarter is expected to have been good to the wholesale club chain. Analysts surveyed by Bloomberg are forecasting a 3% earnings rise on an 8% increase in revenue. Same-store sales could climb 6.4% versus 6.7% a year ago. Analysts say Costco could benefit from the coronavirus panic. A research note from Michael Lasser at UBS is quoted as saying that as consumers prioritize a dwindling number of trips to stores, Costco will likely be at the top of the list. Larry Kofsky, Bloomberg Daybreak.
All right, Larry, thank you. It's 6:38 on Wall Street.
The following commentary is from Bloomberg Opinion.
General Electric's biggest problem is now the coronavirus, and that's a victory for a company that spent the better part of the last 3 years mired in idiosyncratic challenges of its own making. I'm Brooke Sutherland, a columnist for Bloomberg Opinion. GE hosted its Outlook meeting on Wednesday and warned that the coronavirus knock-on effects could shave as much as $500 million off its first quarter free cash flow. Most of that will be in the aerospace division, and GE could be underestimating the hit to lucrative spare parts and maintenance work as airlines cancel flights across the world. The drop in interest rates risks ballooning GE's pension and insurance liabilities. But there were no nasty surprises, and the power unit, long an eyesore, seems to be turning the corner. To say GE has overcome all of its challenges would be a step too far, but when the CEO is devoting a significant chunk of time to issues that every other industrial company is talking about too, that's as good a benchmark as any of progress. I'm Brooke Sutherland. For more opinion, visit Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
You can hear Bloomberg Opinion commentaries every weekday at this time. Terminal customers can read more at OPIN Go. 6:39 on Wall Street. Time for the Bloomberg Green Report with Bob Moon.
Here's a novel idea. Europe is moving to come up with an actual plan for dealing with climate change, clearly detailing its goals and how it intends to achieve them. Europe wants to make it illegal by 2050 to emit more greenhouse gases than it can remove from the atmosphere. Unveiling the draft law in Brussels, European Commission President Ursula von der Leyen said it's aimed at eliminating guesswork and surprises for European industry and investors, providing predictability, transparency, and clear direction which businesses can plan for and profit from.
Because it gives them certainty about what needs to be achieved, and it gives them certainty at what pace.
Maybe, but the debate over what goals to set and how fast they need to be reached has already started. Young climate activist Greta Thunberg argues that instead of setting long-term goals, the EU needs to focus on emissions of carbon dioxide right now to meet the commitments already made 5 years ago at the Paris Climate Summit. That's the Bloomberg Green Business Report. I'm Bob Moon.
All right, Bob, and this red headline just crossed the Bloomberg terminal. Southwest Airlines is cutting its first quarter unit revenues outlook due to the effects of coronavirus and now expects operating revenue to be negatively impacted in a range of $200 to $300 million. You're listening to Bloomberg Daybreak.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
It was a Sunday morning when I jumped on the tube.
And decided to pop down to Greenwich via
a large indoor jungle.
And when I got there, I was captivated by a sparkling
scary dinosaur just standing there right in front of me.
So off we went to Wembley Park
to look at the colourful fish.
Tap into the wonderful world of Off-Peak London. Travel in zones 2 to 6 for £1.50. To the Mayor of London and TfL, every journey matters. £1.50 is an adult off-peak pay-as-you-go fare for a journey not going via Zone 1 on Tube, DLR and most London Overground services. Always touch in and out with the same card or device to pay the right fare.
Fill the trolley with your favourite brands on rollback at Asda. A 38-pack of Fairy Non-Bio capsules was £8.50, now £5.75. A Lenore Gold fabric conditioner was £4, now £2.50. Big brands, small prices. Don't compromise. Asda. Save money, live better. Selected stores subject to availability. Lenore 1.925 litres. Ends 18th of March.
The moment you realise that radiator isn't warming up, it's freezing and half the class are coming for a sleepover. The moment you realise you're covered by British Gas Home Care from £14 a month. That's just 46p a day, including parts and labour. Buy selected home care cover online by the 10th of March and get 1 month free. British Gas, here to solve. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and tune in on Facebook, Twitter, and Instagram to get the most out of TuneIn.
To a network of news and financial information 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
Appeals judges at the International Criminal Court have given the green light for prosecutors to open an investigation targeting the Taliban, Afghan forces, and U.S. military and intelligence personnel for war crimes and crimes against humanity in Afghanistan. The U.S. death toll from the coronavirus has risen to 11, with a victim succumbing in Placer County near Sacramento, California, the first reported fatality outside Washington state. New York State suddenly dealing with 11 cases as Bryn Gingras reports one man is hospitalized.
That infected patient, a 50-year-old lawyer from Westchester County. All of these new cases that we're seeing in the state have some sort of nexus to him, including his wife, his daughter, his son, a neighbor who drove him to the doctor's office, and a family friend and their entire family. And they are all being isolated inside their homes.
Wall Street roared back to life yesterday with major gains. Stock futures, however, are plunging this morning. I'm Michael Toscano.
Tom Keene and Jonathan Farrell.
Is that good for American finance? What is happening with the headcount?
Right, where it counts. Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow at 6:47 on Wall Street. This update brought to you by Withum, a forward-thinking, technology-driven advisory and accounting firm helping clients be in a position of strength in today's modern business landscape. Visit Withum.com to learn more. And futures are falling this morning. We go to the First Word breaking news desk for today's morning call. Here's Bill Maloney. Bill, good morning.
And good morning, Karen. That's right. U.S. futures are under pressure. Dow futures down 465 points. S&P's dropped 60, and NASDAQ futures are lower by 168. The U.S. 10-year yield now at 0.96%. Gold is trading higher by 11, and Shanghai rose 2% overnight, while European markets are posting 1 to 2% losses right now. Back in the U.S. on the economic front at 8:30, initial jobs claims and non-farm productivity, and at 10 o'clock, factory orders and durable goods orders. After the bell last night, Zoom video beat estimates, and regarding earnings this morning, look for Ciena to report around 7 a.m. In deal news, HP rejected the exchange offer from Xerox, and in other news, Southwest cut Q1 unit revenues outlook due to the virus. Wrapping things up, State Street was cut to hold at Deutsche Bank, and over at Goldman Sachs, Checkpoint Software cut to sell. FireEye was raised to buy. Live from the First Breaking News Desk, I'm Bill Maloney. Karen?
All right, Bill, thank you. And here live breaking news over your Bloomberg. Type squawk on your terminal, SQUAWK. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, the U.S. death toll from the coronavirus has risen to 11, with a victim succumbing in California, the first reported fatality outside of Washington state. Meanwhile, Switzerland has reported its first death from the virus that has claimed 3,285 people around the world. A search continues for survivors of deadly tornadoes in Tennessee, where at least 24 people were killed and others remain missing. Chief Justice John Roberts is criticizing as inappropriate and dangerous comments Senate Democratic leader Chuck Schumer made about Justices Neil Gorsuch and Brett Kavanaugh during an abortion rally outside the court. In the NBA, the Nets and Knicks lost, the Celtics won, the Warriors lost. In the NHL, the Capitals lost. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
Thanks, Michael. We're live from the Bloomberg Interactive Brokers Studios. We're at 6:49 on Wall Street. Time now to check what's going on in D.C., where some of the top stories include the Senate taking up the nearly $8 billion coronavirus measure that the House passed yesterday. Chief Justice Roberts delivering that rare rebuke of Senate Minority Leader Chuck Schumer over his rhetoric. And the Fed overhauling Wall Street capital rules, though at least one Fed governor says the move could let banks dial back buffers that are supposed to protect them. Also making news this morning, a tough path ahead for Bernie Sanders in the Democratic presidential race. For more, we're joined by Bloomberg U.S. politics editor Kathleen Hunter as political watchers and markets continue to assess the momentum at Joe Biden's back. What is the challenge now for the senator from Vermont?
Well, I think the main challenge is really just breaking the momentum that Joe Biden amassed on Super Tuesday. I think, it's kind of an old adage in politics, but it's true that voters like to vote for winners. And right now, Joe Biden seems like a winner. And in some ways, that's, just the narrative, because Sanders did have a significant win in terms of California on Super Tuesday. And obviously, he had his previous wins, including his very big win in Nevada. But I think that, the narrative certainly right now is the momentum being behind Joe Biden. And so that's something that Sanders is going to have to break if he's going to continue to, be successful in his bid for the nomination.
And you have to think that the Sanders campaign is aware of the fact that coming up, particularly this month on the electoral calendar, there aren't a whole lot of states like California for him to take advantage of.
That's true. I think the map right now, as we're looking ahead to the next set of primaries, really kind of favors Joe Biden. And that's part of why his, bigger than expected win on Super Tuesday is so significant, because he does have an opportunity here to translate that into, additional wins down the line. Most significantly, we have coming up this next week in Michigan, which, has both auto workers and a significant African-American population that could work in Biden's favor. Then a week later, we have Florida and Ohio. Florida features obviously a lot of older voters who tend to be part of Biden's base. And in Ohio, again, we have, blue collar workers that could be, that could be very open to Biden's message. And so I think that we have to see how all of this plays out, but certainly the demographics of some of these bigger states, and those are all states, Michigan, Ohio, and Florida, that are going to be significant battleground states in the general election as well. So if Biden is able to pull off wins there, I think that does definitely help him going forward.
One demographic I didn't hear you mention is young voters. That has been a big part of Bernie Sanders' argument that if he can drive them to the polls, that's going to be part of the coalition that helps him get in a better position against President Trump potentially in a general election. What's the thinking there?
Well, I think the thinking is that, Trump certainly is someone who won in 2016 and I think is looking to win again in 2020 in terms of framing this as a base election, i.e. Trump is able to really appeal to his base and motivate them to get to the polls. And so the argument for someone like Bernie Sanders or Elizabeth Warren, someone from the progressive wing of the party, has always been somewhat that they are able to do that on the Democratic side, that they're able to motivate the base, energize the base, and that argument relies a lot on the idea of young people coming to the polls. These are people that potentially in a lot of cases grew up in the Obama era and might be a little bit, turned off by the idea of a more centrist, less, exciting candidate in their minds at the top of the ticket. And so I think that certainly is how Biden has been viewed. And And so that could be an argument and a potential Achilles heel for Biden, an argument that works in Sanders' favor.
And I wonder if that's an Achilles heel that points to the difficulty perhaps for Biden of sort of bridging the divide that we've seen play out in this primary race throughout between the progressive wing of the Democratic Party and that centrist lane that Biden has proven now in these last Super Tuesday elections that he certainly can appeal to now.
Yeah, I mean, it's important to keep in mind this is always, is a pervasive schism within the Democratic Party dating back to 2016 and the Hillary Clinton, Bernie Sanders showdown. And so I think that is something that Democrats we're always going to have to contend with in 2020. And it's really going to be an issue for them, whichever path they go, right? If they pick a centrist, then the fear is that young people, might stay home and not vote. If they pick someone more progressive, the fear is that, people to the center might either stay home or vote for a Republican. So I think that's kind of always been the issue that Democrats have had to grapple with, and now it's really coming home to roost, and they're going to have to figure out a path forward.
In the time we have left here, let's talk about the latest efforts to contain and combat the coronavirus. The House obviously passed that nearly $8 billion emergency spending measure yesterday. The Senate takes it up today. Markets seem to like the House passing that. Now a lot of those gains are being given back this morning.
That's right. And I think that, it's important to note a couple things about this package is that, it does have bipartisan support. By all indications, it'll pass the Senate and be signed by the president into law. Mike Pence said yesterday that the White House was in favor of it. And so that's significant. And so I think that was reassuring to markets. It does provide funding to reimburse state and local governments for their coronavirus preparation and response efforts. It includes money to stockpile certain types of, medical equipment that would combat the virus and several other things along those lines. I think it's not surprising that's reassuring to markets, but I think, that's not happening in a vacuum. The other things that we're seeing in terms of developments with this virus across the globe and in the U.S. as well are worrying things. We're seeing the spread. We're seeing, governments taking significant actions to try to clamp down on the spread of the virus. Italy closing schools, the Chinese president canceling a planned trip to Tokyo. And so all these sorts of things I think are, cutting against, whatever reassurance the markets were given by Congress's actions.
All right, we'll have to leave it there for now. Bloomberg U.S. politics editor Kathleen Hunter, thank you as always. We should mention that in the Democratic race, Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent company of Bloomberg Radio, has endorsed Joe Biden for president. You can read more about all the latest developments in Washington, D.C. at Bloomberg.com or on the Bloomberg terminal. ELEC Go is the function for following the latest on the presidential race. And listen to Bloomberg Radio in D.C. at Bloomberg 99.1 and 105.7 FM HD2. Karen?
Nathan, thank you. It is 6:56 on Wall Street. It's time for the Bloomberg Small Business Report, and John Tucker joins us live with more. John, good morning.
Yeah, good morning, Karen. There are increasing calls for aid to small businesses to weather an expected economic downturn from the spread of coronavirus. Julia Coronado is former economist with the Federal Reserve.
I mean, we really need a coordinated fiscal response here. We need some liquidity, maybe through the Small Business Administration.
Jim Caron is at Morgan Stanley Investment Management.
What we need to see is more support mechanisms for these businesses to get bridge loans.
And he raises the example offered by the central bank in Europe.
So the way that you do these things is you have to start to come up with these lending programs. Like the ECB has a nice toolkit to lend directly to these small and mid-sized enterprises.
He also mentions the need for regulatory changes to ensure that liquidity is flowing so small businesses can roll over their loans and small banks are backstopped so they can continue to make bridge loans. It's time like these, Karen says, when you have to overdo it. And Karen, that's the Bloomberg Small Business Report for today.
All right, John Tucker, thank you very much. Again, Southwest saying it experienced a significant decline in customer demand and increase in trip cancellations in recent days, that due to the impact of the coronavirus. Southwest is now estimating first quarter operating revenue to be negatively impacted in a range of $200 million to $300 million. And we'll be watching those shares throughout the morning. S&P futures are lower. They're down 60 points. Dow futures down 465 and NASDAQ futures down 166. Bloomberg surveillance is straight ahead with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Influential Conversations from Bloomberg Television. Here's Emily Chang.
The IMF is making available $50 billion to help countries deal with the coronavirus. For more on the economic and market fallout from the epidemic, I want to get to David Kotak, Chairman and Chief Investment Officer of Cumberland Advisors, who joins us now from Sarasota, Florida. So, David, every day is a different story. Obviously, we're getting more deaths, more bad news from around the world. We've got the Biden surprise upset here in the United States. We've got the rate cut. Where is this leading you on strategy?
Well, we have focused on this high volatility, Emily, 1,000 up, 1,000 down, 1,000 up, 1,000 down. It's extraordinary volatility. We're going to see more of it, we believe. We are sector conscious, so we don't have any exposure in transportation. You just had a discussion on airlines. We are worried about hospitality, cruise ships, and we're worried about some aspects in the credit markets. We're starting to see spreads widen, so we have to be careful about that. We are overweight the U.S. healthcare sector. The U.S. healthcare sector should be owned in the face of the market volatility because it has such a positive outlook for the sector.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app. Or check your local cable listings. Business is like a puzzle.
Can you make a call given the data?
Which segments of Alphabet's business are most likely to come under scrutiny?
Get all the pieces.
They're getting mixed signals from governments.
He's failed to gain traction.
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
The Federal Reserve's independence is crucial.
Central banks should be prepared and not presumptuous.
Finance.
In order to grow, you need to innovate.
Global money doesn't like uncertainty.
Investment.
I think the issue in the market is really more about the possibility of a recession in the next couple of years.
I do think we need to get back to where we have always been, the American dream.
Bloomberg Surveillance with Tom Keene and Jonathan Farrow on Bloomberg Radio.
From New York City for our audience worldwide, good morning. This is Bloomberg Surveillance. Coming up on the program, the global growth scare fueling a surge in market volatility. Low rates for longer sending European banks back towards a bear market, and OPEC ministers gathering in Vienna set to deepen production cuts. From the Bloomberg Interactive Brokers Studio, hello Thursday. Here is your Thursday morning price action. We are down and down hard, off by 61 points on the S&P 500, down by almost 2 percentage points in the bond market, back on track for all-time lows, just off them on a 10-year yield, 0.97%, but down 8 basis points on the session. And Tom Keene in foreign exchange, the euro actually firmer, but European banks very much in focus for all the wrong reasons.
Davide Serra was wonderful on that earlier, and I believe we'll hear from him later. He's in London right now. There's so much going on, but I would suggest a 2-year yield is there, and quietly, dollar yen is just given away moments ago to new strong yen, and on a global basis, that really shows that what has shifted today, John, is much more of a discussion of the virus. Guy Johnson had those headlines out of London in the last 25, 30 minutes on HSBC with some form of virus case within their research arm.
My problem this morning, on a morning like this morning, any morning over the last couple of weeks for that matter, is that the market narrative, the conversations we're having every single day seem to depend on the market price action of the last 5 minutes. We need to address that over the next couple of hours. Through the next couple of hours, though, Lisa, the focus will undoubtedly be on initial jobless claims today and over the next several weeks.
And also, of course, stimulus, because we've got $50 billion coming out of the IMF toward emerging markets. We have the $7.8 billion stimulus from Congress, and we have $38 billion from Asian countries. And there's a question of where this will go. Will it go to people who are not being employed because of the shortage? And I think there's going to be a huge focus on that as well.
Good news so far, Tom. ECB, BOJ seem to be looking at the right things. Bank of England too. Targeted lending programs. I've been disappointed here in the United States, the lack of action beyond rate cuts at the Federal Reserve, the lack of conversation around fiscal. We haven't seen enough yet.
This came up today in a number of conversations, and it's an ancient American debate, John, over federalism, I'll get the word out, or states' rights. And, it falls over into medical and in the pandemic as well, the rights of the states to do things. Or does the Fed just not want to do things? And that's part of the Washington debate. Jeff Fitzpatrick was great on that as well. Look at this headline across, which is an EM headline, The World of Damian Sassower. And, John, it's something you and I have been watching for weeks, which is selected commodity-based currencies giving way. In Brazilian real early in the morning, it sounds like they've just given it up and have stopped supporting the real.
460, a break of 460.
And to give you perspective on that, folks, 4.00 was a big deal on real X number of weeks ago. Turkish lira is a little bit stronger, actually churning here, and that's with Mr. Erdogan meeting with Mr. Putin.
We've done some real damage this morning. Let's talk about some of it. Really pleased to say we've got a class act in the studio today. Howard Ward, CIO of Growth Equities for Gabelli Funds. Good morning to you, Howard.
Morning, Jonathan.
How much damage have we done? How long does it take to recover from something like this? We're up 3-4%, we're down 2%. Next day, same thing, following day, different.
Well, last week, in about 7 days, the S&P 500 erased 2.25 years of gains. So the damage has been severe. We were down on closing prices at the low, I think, 13% from the high of just 10 days or so ago. So significant damage. And typically, when you have that kind of damage, the market doesn't snap back. Now, if you have a fat finger flash crash, where it's not a function of deteriorating economic fundamentals, the market can snap right back. That's not the case here. We have a global healthcare crisis emerging, and people are resetting their expectations for growth and earnings, and stocks are resetting as a result. So it takes a while to recover from the amount of technical damage the market has incurred, and I'm talking about a period of months.
You're a good friend of this program, which means I'm in a privileged position to know what you're doing, where you're positioned. You haven't made a single trade, have you, over the last couple of weeks?
No, I haven't. Now, the qualifier there is that in our Gabelli Growth and Global Growth Funds, we have had a defensive tilt on the portfolio now for 2 years. And the good thing is, for 2 years, actually, defensive growth stocks have generally outperformed. And during the crisis of the last 2 weeks, that outperformance has continued. So I haven't felt compelled to get more defensive because we were gaining ground during the decline. If I had not been defensive, then maybe I would have done something. But I literally haven't done a trade for the last 8 or 9 days. So I don't know if I'm earning my keep or not. But
it's questionable. Yeah. Is Apple a defensive stock?
In the short run, Tom, I don't think it is, and that's because all of the big gains last year, which were at the peak about 100% year over year, were driven by multiple expansion, and part of that was market related, and part of that was in anticipation of a big new cycle of 5G phones coming out in the third quarter, or actually their fourth quarter later this year. And of course, now you have the multiples coming in a bit, and you have the earnings estimates coming down. Tim Cook has already come out and said they're not going to make their numbers. They're having supply chain somewhat more dependent on China than many companies for parts and for assemblage.
Why is it only 7% beneath its record high? I mean, you're talking to me about a stock down 15 or 20%, and we're not observing that in some, not just Apple, but other stocks as well. Yeah. Why are they holding in so well?
Well, why? And I would argue, why is the overall market doing as well as it is? I don't think the overall market has yet come to the conclusion that the earnings estimates on the S&P this year are not going to be $175, which was the expectation going in. They're not going to be $172, which is where some analysts are right now. They're probably going to be $165, which will be flat, and they might very well be negative. And it's when you have negative earnings growth in a period of widening credit spreads and higher global risks, that's when stocks take the most pain. And so I'm being willing to err on the side of conservatism here in my comments to tell people that this market is we're going to have up days in this market like we did yesterday. But if earnings go negative, we're going to new lows. And it might not even take negative earnings to take us to new lows. It's going to be a volatile market, and I think that the trend is going to be negative for a while.
And Lisa, the read of the morning with our question, John Plender with a substantial article in the FT just on that, the credit spreads and the challenges within the debt market and how they then fold into the equity market.
And right now we're seeing spreads tighten. We're actually seeing people come into particularly riskier credit on this bet that the Fed will continue to lower rates and it will push money into riskier assets, Howard, though I do wonder what will make you buy?
I want to see the news flow on the virus show that we're over the hump and that it is receding. And I have no idea when that's going to be. Whether that is in a month, 2 months, 3 months, 4 months, I don't know, and neither does anybody else.
And this is really important for those just waking up across America. Good morning, Boston, New York, Washington, and of course, early mornings at Bloomberg 960, the Bay Area. John, the major message today is, just as we've heard from viral experts, the viral news, the piece here, the piece there, the piece there, it's increased substantially this morning.
But Howard's nailed it, and you brought up Apple. We've adjusted the earnings estimates for what's happened in China. We haven't even started to do that for Europe. We haven't even started to look at what it means for the United States. And if I was looking at this market right now for the second half, the risk-reward profile needs to shift rapidly. If you move the E down a lot, then I imagine, Howard, you might be a little bit more constructive right now.
Well, let me tell you what happened in the 2000-2002 dot-com bubble burst. Stocks declined, obviously, substantially, and a number of stocks, particularly technology kinds of stocks that we wanted to buy, had declined 20, 30, 40%. And we thought, what a great opportunity. Let's buy more. And we did. And at that point in time, in talking to the CEOs of those companies, they said business was great. It wasn't. They either didn't know or they weren't being honest or some combination of the above. Earnings estimates then got cut another 40%. And the stocks went down with them. It was a horrible move to be too quick back into the market.
Are you equating what we have right now to what you and I lived in 01?
I'm thinking, I don't want to be too gloom and doom, but I think the potential is here for a drawn-out period of estimate reductions because we just don't know. Now, having said that, when the smoke does start to clear, I think we'll have a strong recovery. So you don't want to take your eyes off this situation. With all this liquidity, with rates this low, with the economy doing well, through February, the economy was fine. But I want to wait until the smoke starts to clear, and at that point, then you really want to, I think, get more aggressive. But until then, because we don't know when then is and from what level. Yeah. I'm preaching patience.
Well, Howard, at this point, it sounds like you're waiting for more smoke. Never mind for it to clear. And I'm just wondering, if you're waiting for more revisions to earnings, where are you expecting them to be concentrated? Which sector right now, or is this broad-based on the S&P 500?
Well, your more cyclical industries tend to be the ones that get hurt the most. And where is there the most pain today? Energy. You're seeing that with the OPEC talking about cutting supply. The commodity-based businesses have high beta relative to economic growth. And so they're going to suffer. Materials, energy, and industrials are the three areas that tend to get hurt the most during this type of a weakening economy estimate reduction period.
Howard Ward, CIO of Growth Equities for Gabelli Funds. Great to catch up with you this morning. Futures, guys, negative. We are down hard after the big gains of yesterday. The S&P 500 down by 58 points.
And the yen coming in as well, 106.89. It's a stronger Japanese yen, and that moves off of what we saw the end of February and also the end of March 3rd as well. Right now with the news in New York City, here's Michael Barr.
Tom, Lisa, John, thank you very much. Global cases from the coronavirus outbreak top 95,500, and the death toll rose to 3,285. Switzerland reported its first death. The U.S. death toll from the coronavirus has risen to 11, with the victim succumbing in California, the first reported fatality outside Washington state. The House approved a $7.8 billion spending package as California declared a state of emergency. Vice President Mike Pence.
The legislation implements the president's vision to ensure that not only do our federal agencies have the support and resources that they need, but also that our state and local partners have their support.
Texas health officials announced their first possible case of COVID-19. The patient, a 70-year-old man from the Houston area, had just returned from traveling abroad when he developed symptoms. The CDC is working to confirm the diagnosis. Director of the Fort Bend County Health and Human Services, Dr. Jacqueline Minter, says that because this case was likely travel-related, the risk to the general public in the area remains low.
We have watched the numbers of cases increase daily across the U.S., and it was just a matter of time before Texas announced its first case.
Meanwhile, New Jersey has reported its first case of the virus. Governor Phil Murphy says a man in his 30s has been hospitalized in Bergen County after he tested positive for the virus. In Tennessee, the search continues for possible survivors from this week's deadly tornadoes. One twister tore through Nashville. The second tornado, an EF4, was in Putnam County. In all, at least 24 people have died and dozens more were injured. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, sir, thank you. Thank you very much. Michael there with the news. Let's get you up to speed on the price action this Thursday. Really big day of gains Wednesday on Wall Street. We roll over, though, this morning, down by 1.9% on S&P 500 futures, negative 59 points. The scene in the bond market as follows. The whole yield curve, 2s out to 30s, just drops 7 or 8 basis points, Tom. 0.62% on 2s.
Yeah, and the 2-year point was 6190 and looking really to test to new record lows. We're not there yet, though. From New York, please stay with us through the morning. This is Bloomberg.
Calling to the faraway towns. Now war is declared and battle come down. London.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Influential conversations from
For centuries, Welsh farmers have been perfecting the balance between maintaining the spectacular landscapes of Wales while producing delicious lamb and beef. Lucky for us, we have everything we need from the elements: grass, rainwater, and a whole lot of pride. Sustainability is key as we continue to work in harmony with our surroundings to bring you a plate that's uniquely Welsh. It's in the taste. Learn more at eatwelshlamandwelshbeef.com.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs. or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Bloomberg Business app and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures are sinking this morning alongside stocks in Europe as market choppiness persists while investors size up government efforts to contain the coronavirus outbreak. Treasuries are rallying along with the yen and gold. And we check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down about 58 points. Dow futures down 452 and NASDAQ futures down 158. The DAX in Germany is down 1.6%. 10-year Treasury up 27 seconds. Yield 0.96%. The yield on the 2-year 0.61%. NYMEX crude oil up 1/3% or 17 cents at $46.95 a barrel. COMEX gold is up 0.5% or $7.80 at $16.50.80 an ounce. The euro 1.1194 against the dollar. The yen is at 106.83. British pound at 1.2930. And Southwest Airlines becoming the latest carrier to feel the sting of the coronavirus's impact on air travel, warning a significant drop-off in demand in recent days will put a dent in first quarter revenue. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thanks so much. We're really watching markets. Lots of nuance here. We'll get to yen. We'll get to yield here in a moment. We welcome all of you worldwide and coast to coast. Bloomberg surveillance this morning. 5 things you need to know. Thank you, Interactive Brokers, for your support. There's like these headlines that come out once a year and you're waiting. And Lisa, you've got your viral headline. John, you've got your viral headline. There was that HSBC headline. I'm sorry, has come to Wall Street this morning.
Yes, some reporting in the last hour that HSBC had to evacuate some employees from its London office after one worker tested positive for the coronavirus. I believe we understand that's from the research department, but it just sparks the worries, doesn't it? Not just for HSBC, but for the city, for Canary Wharf, for the transport system. Who has this person been in contact with? That's how much work you need to start doing now. Who has that person been around? Where have they traveled to?
Where are we in New York, in London, in 3 weeks or 3 months? That's what I find fascinating.
Don't know, and isn't that the problem?
Well, but there's also a question about contingency plans, right? Especially for systemically important companies. What do you do if there is some sort of scare and people can't work from the office?
Okay, so Steve Major works from the football field of West Ham. I get that. What do people do that don't have the luxury, that aren't working brain power off of a computer? What do they do?
Really difficult. And what do they do about money? And what do they do about childcare if the school's closed and one parent has to go out and one parent has to stay? What if it's a single parent? These are really, really complex issues. How long does it go on for? What's the scope, the severity? Can small and medium-sized enterprises get through this with a big, big shock to cash flow, even if it just lasts a month? They're big questions that remain totally unanswered. Well, and this market head firmly in the sand.
There's a big question also about the fiscal response, and we are starting to get some of it trickling out. $50 billion toward emerging markets, $7.8 billion approved by Congress. Where is it going to go? How do we even measure its efficacy? Is it going to be staving off some of the lost income from some of those workers, Tom, that you're talking about, or talking about the small, medium-sized businesses, John, that you've been talking about so importantly?
It's a political response, and lots more on this through the day. Let's take the effect of this talk on medicine over to yield, and there's no question, John, you mentioned earlier, it's not only the oddity of 0.6170 on 2-year, watching 30-year, watching 3 months, 30-year spread. What's the spread, John, this morning that interests you?
I'm just looking at the level of 10-year rates relative to where state policy rates are in each and every individual country. Bob Michael at JP Morgan said something quite profound to me a little over 12 months ago or so. He said, look at every single rate, say Bunds 10-year, look at Treasuries 10-year, look at Japan 10-year, and then compare it to where the respective policy rates are. They either sit inside or right on top of the policy rates in those countries. We are flat through the whole curve.
So this is, to explain this to the public, this is a policy rate set lower than the short-term, 2-year?
Yeah, let's say if Fed funds is at 1%, 10-year Treasury 1%. If the ECB is at negative 50 basis points, you've got a 10-year Bund in and around that level. If we're at zero over in Japan, right. Guess what? 10-year in Japan, near zero.
I want to flip this here, and we're going to go to our fourth idea this morning. John Plender, I thought, as he always does, a tour de force in the FT, and Lisa Abramowitz, he really brought in not only Ottmar Issing, the great economist of Germany, on capital misallocation, but also just reviewed what you talk about every day, which is the credit market, the spread market, and the mass of corporate credit that that's out there. What have you seen off the screen?
What's kind of interesting is yesterday you saw a defreezing, certainly of the investment-grade credit markets in the U.S. And meanwhile, John, to your point about the compression of yields on the benchmark rates, if you take a look at investment-grade bond yields, new all-time lows. So the companies that are going out there, even the BBB-rated companies, are getting record low borrowing costs. And this is sort of the conundrum for a lot of people, right? Because as rates come down, it's getting cheaper to finance companies. This should provide liquidity to the system. That said, there is a question of the lower bound. And to your point with Christine Lagarde, there is a 90% chance priced into European money market markets that they are going to cut rates over at the ECB.
Let's wrap up the scripture. This is really important. George Saravelis clearly with a research piece yesterday on the Swiss franc and the idea of the distortions in the system, John. And the basic idea here is Swiss franc stronger. They go to 1.00 on Euro Swissy. If you don't know what that means, all you need to know, strong Swiss franc, where they would bolt off that balance sheet distortion into a sovereign wealth fund for the Swiss people. Lagarde's dealing with these massive distortions, and Jean-Claude Trichet today on Bloomberg Surveillance was scathing about the urgency of this.
President Lagarde's biggest issue, I think, at this moment is the divided governing council that she's inherited from President Draghi. Hasn't had much time to get them all on the same side to address an issue as complex as this one. My issue over the last couple of weeks, and I've had it on this program, is just the amount of complacency in central banks worldwide. And I keep going back to it. 2-3 weekends ago in Riyadh, flying Falcons. What on earth were they doing? They should have been planning contingency plans and protecting us against downside risk. Tom, I haven't seen any evidence of that.
I went falconing last weekend, and it's very relaxing. You should see that, Bill.
I'm pleased you're not the chairman of the Fed. I'm pleased you're not the
Did you see the video that we put out? Folks, we're going to put out a video of our falcon up in the tree in Central Park with that, Bill. It's an emotional video. You'll be able to see that soon.
I look forward to seeing that out on Twitter. The good news, I will say this. The central banks with limited ammunition, or so-called limited ammunition, i.e. not much space to cut rates, the ECB, the BOJ, the Bank of England for that matter as well, ironically, they're the central banks that are most likely to do the right thing, which has come up with targeted lending programs. Heard it from Governor Bailey yesterday, hearing it overnight from the Bank of Japan, some of our reporting around that, and we're likely to see the same tools deployed to the ECB.
And actually targeted to, for example, airlines and the travel industry and some of these essential providers. I mean, this is sort of the key question is, when do some of these companies not just go out of business, because that's not necessarily in the cards, but start laying off workers, putting them on furlough?
Now,
this is sort
United and JetBlue are doing that.
Exactly, and this goes exactly, John, to your point of workers who don't have the luxury of just calling in from home.
This is an important distinction. I think for a lot of Americans, it's different. John, very quickly here, when they target aid, are they targeting it to banks or to the people?
You can do it through banks, but you set some limits on that, and you set some policies and regulations around it, that if we're going to lend you this very cheap funding, you have to do X, Y, and Z with it.
Airlines. Guy Johnson was brilliant this morning. What's it called? The one that went under? Flybe. Explain to our American audience Flybe. I don't think there's a U.S. equivalent.
Domestic airline, living on the edge anyway.
Coventry to Birmingham?
Those kinds of routes, not really, because you could do that in a car in 25 minutes, 30 minutes. But the likes of London, say up to Scotland, to Glasgow, or London to, say, Manchester.
For how much? The rates over there are nuts. They're like for $30,
They'll
right?
be really cheap prices. The thing I would say this morning, don't panic too much about Flybe. It was in a lot of trouble going into this particular period already, and was on the edge of its seat already.
Okay, we got through this football free.
Well done. We'll do football tomorrow. There's a lot to discuss, actually.
Let's do football today, actually. Futures at negative 56. Stay with us. This is Bloomberg. Good morning.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
This is a Bloomberg Money Minute. Stocks headed for a lower open today as the roller coaster ride on Wall Street continues this week. We had a sharp gain yesterday with the Dow up almost 1,200 points as the market reacts to the latest coronavirus headlines. Healthcare firms rose the most in more than a decade as the weak performance by Bernie Sanders in the Super Tuesday primaries dented the threat of policies that would shake up the industry. Michael Bloomberg, the founder and majority owner of Bloomberg LP, had sought the Democratic presidential nomination. He endorsed Joe Biden yesterday. Carnival's Princess Cruises has diverted a ship bound for Ensenada, Mexico, after a 71-year-old passenger who'd recently traveled on the ship died of coronavirus, becoming California's first such fatality. The ship was to be held off the California coast while state officials tested passengers and crew. Dow futures down 480 points, checking crude slightly higher, almost back to $47 a barrel. Gina Cervetti, Bloomberg Radio.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions. Have you ever thought, I wish I'd had that information sooner?
Talk to us about applications.
Let's fix that.
You own a number of brands.
Bloomberg Business Week, weekday afternoons at 2 Eastern on Bloomberg Radio. Bloomberg Business Week, now live on YouTube. Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio. Big gains on a Wednesday this morning. Some sizable losses, down by 53 points and off session lows just about. We're negative 1.69%. In the bond market, the whole curve heading south. 2s out to 30s down around about 7 or 8 basis points. On your 10-year yield, we're down almost 9 now to 0.965%. On 2s, just 0.62%. In foreign exchange, the euro showing a little bit of strength, the dollar showing a little bit of weakness. In about an hour from now, the focus will be on initial jobless claims in America, and that's going to be an increasing focus in the coming weeks.
Yeah, we got ADP yesterday, and I got with a revision. It was interesting, but the jobless claims really gets a lot of attention, the weekly data as well. And then within the blur of all this news, is the jobs report tomorrow a big deal?
Payroll's Friday. I think it's less of a big deal. And I think if you ask some people, they're going to be more focused on initial jobless claims in the coming weeks. If you're worried about small and medium-sized enterprises needing to make cuts, it's going to show up in the high-frequency data pretty quickly.
Maybe wage growth isn't there, which gives the Fed cover to cut rates at a meeting I believe they have scheduled the middle of March.
Well, but it also raises a question of, to your point, John, the narrative, and do you end up dismissing positive data as just simply being not including the coronavirus effect, and negative data as just perhaps the tip of the iceberg. I mean, this is going to be very noisy.
Yeah, too early to get it in the data in the United States, that's clear, and too early seemingly to get it out of Europe as well. I think the March data now is what everyone thinks was going to be absolutely terrible at this point.
Well, we'll continue to monitor some of these data points. Again, yen is stronger this morning. Very important chart at a triple bottom. It's on support right now, 106.93 on yen, and as John mentioned, to 4 digits, a 2-year yield, 0.6190. Watching the fixed income markets and doing it for the Bank of America, Matthew Disick joins us right now. Matt, you've been doing this for more than a number of years. What is different this time about these new low yields?
Yeah, so unfortunately what's different this time is they are finally playing catch-up to the rest of the world. And it seems like, unfortunately, we are headed likely close to the zero lower bound again on the short end. So what's different is that we had hoped that we were escaping the disinflationary and deflationary shocks that the global economy gives from time to time. We had been able to keep rates well above the rest of the world, and it does not seem like that's going to be the case, because as you can see from the warp on the Bloomberg terminals, it does seem like the market is pricing in another 3+ rate hikes at this point, bringing us close to the zero lower bound again early next year.
What is a speculative bet in fixed income right now? One of the things you do at the Bank of America that's different is not only look at the yield call and the rest of it, but the positioning on the street. What is the positioning in full faith and credit, and also in the spread market?
So positioning obviously has been long, high-quality assets into this, and you've seen that again for the Treasury curve. We've seen buyers across all sort of customer types. But what's been relatively interesting is that investment grade has performed relatively well through this. And 2018, the back end of 2018, when stocks dropped 20%, is a good comp. Back then, investment grade had gone from about 100 to 160, and 200 tells a recession's coming. So there was a 60% chance of recession. Here, credit spreads are only out about 20, 25 basis points or so. So investment grade has actually performed relatively well through this downturn in the markets. Funding markets are open. Short-term markets are working well. Deals are getting done. Corporate bonds are actually up more than 4%, which is actually a favorable sign. High yield has, however, sold off a bit more than that, and is pricing in at least a chance of some idiosyncratic defaults, or some places where there could be some pain, for instance, low-quality energy issuers.
What's the big dynamic underpinning the resilience of IG right now, Matt?
So if you take it all together, if you look at what the yield curve is telling us, obviously it's moved significantly lower and inverted on the short end, but the long end has actually widened. 10s, 30s right now is more than 65 basis points. So you've actually seen a steepening relatively on the long end. So if you look at that and you look at credit, it does tell you that, as our friend Michael Hartnett on the Bank of America security side said, markets stop panicking when policymakers start panicking. So the idea here is that the curve certainly tells you the Fed needs to cut, but it tells you that it's ready, primed to cut, and possibly also reintroduce quantitative easing down the line if necessary. So it should be able to forestall a deep recession in the U.S., which, all things being equal, should be positive for investment-grade credit in aggregate. It's telling you right now that recessionary risks for the U.S. at this point, it's obviously a fluid situation,
of course,
are relatively low, and the fiscal monetary response can help us deal with this.
There's a spread of a different kind going on here right now, though, Matt, because if you speak to economists, as you well know, when you ask them about the efficacy of rate cuts in this environment, they'll say it's not great. And yet there you've got a credit market that's saying it'll keep financial conditions loose. So the spread between the fundamentals and financial conditions, doesn't that start to grow a little bit wider?
I think that's certainly a fair point. And the Fed, in some ways, has been talking about this behind the scenes for several years now. If you've been reading the minutes or listened to the governors like Lael Brainerd, they've been saying not only is it possible that we're going to go back to the zero lower bound, it is likely. So they've been aware the whole time that during the next recession, they'll be at the zero lower bound, and unsurprisingly, before recession, or surprisingly, I should say, we've gotten there. So it's going to require most likely a monetary, but as well a fiscal response. So you'd expect hopefully something on both sides to keep this going, because to your point, in other regions, just lowering rates or buying assets has been pushing on a string somewhat. I would say the U.S., we believe, is fundamentally different because we do not have a fragmented banking sector like Europe. The commercial banking sector is quite healthy here, and so it is easier in the U.S. for the Fed to transmit monetary policy to the real economy through the banking sector here. Because, again, it's always a public and private partnership, right? The Fed creates the conditions, but the commercial banks actually create the loans, creates deposits, really function to have money creation work in the U.S. And we've got a better chance for it to work here because we have a healthy banking sector, significantly more capital than 2007, significantly more liquidity. So even though we think it could potentially require both a fiscal and monetary response at some point, if it continues down this path, the U.S. has a better way to transmit that monetary policy to the economy, and that's why one of the reasons we've been able to stay away from these low rates.
Matt, I'm wondering, there's a barbell between income and capital preservation within fixed income. And I'm wondering, as you talk to clients, where are they? How much have they shifted to capital preservation versus income?
So the retail clients through this volatility have actually not been making major changes. They've been relatively sanguine through this, but I can say that the view on capital preservation has lasted with a large section of our client base since the financial crisis. A lot of people have been much longer, shorter term instruments, lower duration instruments, and higher quality instruments. So there has been a lot of folks that have sacrificed yield. And again, the two largest questions I get, and I have gotten for several years now, are, Matt, why am I even in bonds at all at yields at 2 or 3%, and why are not short duration?
Well,
and
Matt,
this environment sort of tells you why.
Matt, thank you so much. Matt Disick with us with the Bank of America today with an adjustment of bonds. And John, as Matt speaks, very quickly here, 0.6150, really testing new lows on the 2-year yield.
Just unreal, isn't it? And I actually caught up with Steve Englander of Stan Chart recently.
What did he say?
His take in the last 24 hours when he published another rate cut coming in March, another rate cut coming at the end of April. So another 50 basis points coming in the next couple of months.
And you see that and you wonder, again, as you say, what the accommodation will be at other central banks. Let's do this right now with futures at -60. The Bloomberg NJIT STEM report, always brought to you by New Jersey Institute of Technology, offering an MBA that provides STEM professionals with a technology-focused experience. Learn more at njit.edu/MBA. Here's Bob Moon.
Tom, Lisa, Jonathan, good morning. Here's what's making news in science, technology, engineering, and math. U.S. senators are putting a spotlight on a facial recognition software company over privacy concerns and the possible sale of its services to authoritarian regimes. Clearview AI has come under their scrutiny after investigative reports about its practice of harvesting billions of photos from Facebook, other social media, and other online sources to identify people. Senator Ed Markey, a Massachusetts Democrat, sent a letter this week seeking more information about the company's marketing in Saudi Arabia and other countries. Oregon Democratic Senator Ron Wyden met with the company about his own concerns. Several web companies demanded last month that Clearview stop harvesting their images of their users. You probably know the idea behind Snapchat and something like it on Instagram. Now Twitter is experimenting with something similar, tweets that disappear after 24 hours, although initially the ephemeral messages are only being tried in Brazil. The 280-character service is calling this new feature Fleets because of their fleeting nature. They're designed to allay the concerns of new users who might be turned off by the public and permanent nature of normal tweets. Fleets can't be retweeted and they won't have likes. People can respond to them, but the replies show up as direct messages to the original tweeter, not as a public response, turning any back and forth into a private conversation instead of a public discussion. That's the Bloomberg NJIT STEM report. Tom, Lisa, Jonathan.
Bob Moon, thank you, sir. Appreciate it. Let's get you up to speed on the news, the headlines worldwide, shall we? Let's cross over to Bloomberg's Michael Barr. Good morning, Michael.
Good morning, John, Lisa, Tom. Authorities in Switzerland say a 74-year-old woman infected with COVID-19 has died, the first death due to the coronavirus reported in the country. Officials said today that the woman had been hospitalized since Tuesday and died during the night. Worldwide, more than 95,000 people in about 80 countries have been affected. In the U.S., the House passed a $7.8 billion bill to fund efforts against the virus. The coronavirus has killed at least 11 people in the U.S., most of them in a nursing home in Kirkland, Washington. Kevin Connolly's father-in-law is a patient in the nursing home.
This feels to me like they have written off this community. This is an at-risk, vulnerable, elderly community, and somebody has decided not to waste the valuable resources, limited resources we have on these people.
The one other virus death in the U.S. is in California. Joe Biden is pledging to unify Americans as he prepares for a potentially long fight for the Democratic presidential nomination against rival Bernie Sanders. Meanwhile, the Vermont senator hopes his apparent win in California will spur him to further wins. New York City Congresswoman Alexandria Ocasio-Cortez says Sanders has strengths that can propel him to victory in November.
He's very strong with voters who make less than $40,000 a year, which, by the way, is 60% of the American public. So we're really excited in reaching out to working families and championing the cause, saying, yes, we are the stronger candidate against Trump, and we can do so while advocating for a living wage.
Ocasio-Cortez also says, I am supporting Bernie Sanders until the end, but at the same time, I am also committed to supporting the nominee, whoever that might be. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you, sir. Michael Barr with the news. Let's get you some price action, shall we, this Thursday. Would you believe it that the CSI 300 in China is actually positive on the year now?
Why is it?
By 2.69%. Not much of a market, let's put it that way.
Supported by the government?
I imagine it's largely supported.
I don't want to get you in trouble, but
absolutely, they're the plunge protection team. That's what people say.
Had enforced in the last couple of weeks.
That's what
apparently.
We call a put, right?
In a big way. That might be the sheep put.
I don't want to get you in trouble.
I'm not in trouble at all. I think that is a very, very distorted market, and maybe some people would say, hey, aren't all markets distorted right now?
Yield pricing 9 basis points on the 10-year, 0.9585, and all sorts of signals there, I swear.
Whole curve heading south. We're down by 9 basis points on 10s, down 8 on 2s. From New York, for our audience worldwide on Bloomberg Radio, this is Bloomberg Surveillance.
With the Bloomberg Business of Sports report, I'm Michael Barr. Japan's Olympics ministers said it would be theoretically possible to delay this summer's Tokyo Olympics to a later date in 2020 amid worries the coronavirus could cause the Games to be canceled for the first time since World War II. Seiko Hashimoto told a parliamentary committee the delay within the calendar year was possible under the terms in which Tokyo was awarded the Games. Hashimoto said, though, Japan was pressing ahead with the currently planned July 24th start. She also said that she understood from comments made by International Olympics Committee member Dick Pound that the end of May would be a key stage for the decision. Organizers say, though, they would be more likely to call the event off than delay it or move it elsewhere due to costs and logistics. And that is a Bloomberg Business of Sports report. I'm Michael Barr, brought to you by Grainger, America's trusted source for industrial and safety supplies. Visit Grainger.com.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Global news 24 hours a day, on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg Radio. Now, a global news update.
From The Hague, the International Criminal Court is allowing prosecutors to open an investigation into...
As we move towards 1 trillion connected devices, compound semiconductors made in Wales are set to power the 4th industrial revolution. Wales also has one of the largest cybersecurity ecosystems in the UK and a thriving fintech industry. 8 universities are producing a talented tech workforce for the future, and our devolved government has a strong vision for growth. If you're looking to expand your business, go to tradeandinvest.wales. This is tech. This is Wales.
Incredible. This piece is my favourite. Stunning. I can't look away. Who's the artist? It's clearly a Costa. Oh, look. There's the artist now. What do you call this masterpiece?
We call it our velvety smooth flat white.
Crafted with the world's best beans and finished with a floret hand-drawn by expert baristas, the flat white at Costa Coffee really is a work of art. Visit the nation's favourite coffee shop and enjoy one today. The question, what is your favourite branded coffee shop, was asked. See costa.co.uk for full details.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
This is Bloomberg Surveillance, time for a Bloomberg Business Flash. Let's start with earnings revisions and production cuts. We're seeing them from a host of companies around the world. Start with Norwegian Air. They withdrew guidance for 2020 with shares plunging almost 7%. Meanwhile, Airbus saying that they might cut production to one of their key jets, down more than 3%. Continental, an auto parts company, gave a disappointing 2020 outlook. And ITV forecasts a slump in ad sales, with companies delaying marketing campaigns. Its shares down almost 11%. Meanwhile, if you take a look at the banking sector over in Europe, you can see the UU Stocks Banking Index just had its biggest drop from the peak to the trough, entering a bear market of the year, more than 20% down as people weigh production potential for further rate cuts. Meanwhile, that brings us to the idea of Japanification. If you look at yields across the board, you could see just down, with the exception of 2-year yields in Germany. It's starting to tick up a little bit. Still, people expecting there to be more stimulus over in Europe. The U.S. and Canada both implementing 50 basis point rate cuts in respective days. Meanwhile, oil prices ticking up just a little after OPEC agreed to production cuts, even without Russia. So that is your picture for the day. Tom and John.
Lisa, thank you so much. Again, futures negative 55. John and I are watching yields, a 2-year yield 0.6229. It dovetails, and we like that when we have a world-class guest, and we also get a world-class headline from a minister of, in this case, an oil nation. Goldman Sachs in recent days look for a prevent of large inventory builds. They just don't see the production cuts working for Saudi Arabia and the other OPEC ministers. And then, John, there moments ago is the headline out of Saudi Arabia, which is the heart of the matter, which is a cartel without the Russians. We will see tomorrow if Russians are on board. Those are the constraints.
Yeah, a decision without the Russians isn't really a decision, and that's the problem. So they get together today over in Vienna, the ministers of OPEC, not OPEC plus, but OPEC, and they basically discuss a 1.5 million barrels of oil per day cut. But obviously the market doesn't really move on that because it's not a cut until the Russians are on board. So the oil minister effectively saying we'll find out tomorrow if that's the case. Crude right now, slightly negative on Brent, $51.11.
Yeah, we see 51.11 on Brent, which is in the vicinity of Goldman Sachs call. Jeffrey Curry joins us now from London, of course, driving all of their commodity coverage as well. Jeffrey, I must have you look at the headline. I'm not sure you've seen it. It's only been in the last minutes across the Bloomberg terminal. The Saudi oil minister, we will see tomorrow if the Russians are on board. Let's talk first principles. Why does OPEC and the Saudis need the Russians on board?
Because they need to have as large of a cut as possible. But we like to argue, no matter what, it's too little, too late. The damage to demand, particularly in China, occurred 3 to 4 weeks ago, and now you have it materializing in the West. The total demand decline is somewhere around 4 to 5 million barrels per day at this point, potentially even larger. So cutting 1.5 million barrels per day in April is really going to have no impact. So your downside risk is baked in. The question is, how can they normalize inventories over the course of the year? And they need the support from the Russians.
Give us one example, and this goes back to the Jeff Curry microeconomics of decades ago. You're teaching microeconomics at Chicago years ago. Give us one example of how microeconomics adjust price. Give us one example where somebody takes a lower price in oil because of a lack of demand.
I think the biggest margin of adjustment is going to be as inventories begin to fill because of the fact that demand is far lower than supply. Does the build in inventories overwhelm the ability of the system to accommodate those inventories? And we call that breaching inventory capacity. If that were to happen, you really open up the downside in oil, and we could see prices going sub 40 down into the low 30s. Our base case is we avoid that, and we end up with prices in the low 40s.
Low 40s is still the base case.
On Brent, and that's on Brent.
And this is on Brent from $51.41.
Yeah.
Jeff, that's huge.
Yeah, you got a lot more downside. I mean, let's remind you, the hit to demand is on par with 08, 09, if not even larger in terms of the high frequency data. This is one of the biggest events we've ever seen in our lifetimes. You just shut down the second largest economy in the world. It's going to have ramifications.
Jeff, the interesting part of this, though, is that other asset classes can look through the shock and price in a better second half. Just talk to us about the difference between commodities, say, and equities as an asset class, and why it's just a different story.
Excellent question. We like to argue that commodities are spot assets. Their price has to clear today's supply and demand. In contrast, financial markets are anticipatory assets. They anticipate the future. Because remember, you take an equity, it's nothing other than the discounted sum of future earnings. And so they can price in the stimulus, the rate cut, and all of that. Commodities have to deal with the surplus today. So I like to say there's a tug of war between surplus and stimulus, and commodities in particular are caught in the middle of that tug of war.
Jeff, how many bankruptcies are you expecting as a result of potentially $30 barrel oil?
If we got into that, it would damage the industry. But I like to point out the oil patch was already in very poor financial health, even at $55, $60 a barrel. That could be, you can see it in the equity indices that they have come down sharply. In fact, I think it was on either Friday or Monday, the equity energy industry hit an all-time low.
What does Exxon do?
Yeah, I think Exxon is unique from the rest of them is that they're investing in conventional oil supplies on a forward basis. No other company is making large-scale investment like that. They're either doing, like in Europe, they're doing renewables and gas. So if we look out forward, because of the environment right now and the poor financial health of the industry, we're going to see underinvestment when you get into 2021 and beyond. And so those who make investments right now are going to be well-positioned a year or so from now.
Jeff, what's a Jeff Curry interview if we don't bring up gold? Let's talk about it. What's happening? Some days we're down aggressively when I'd expect us to have a bid because it's risk off, and then we're down on gold, and it doesn't make sense to me. And people are talking about things like margin calls. What is the dynamics that are playing out in a gold market at the moment?
Well, if you think about, when you have panic set in because of markets coming down, you need to raise cash to hit your margin calls. And the most winning position over the last year or so really has been being long gold, and it was at a very high level of length. So when you need to raise cash, you always go to your winners and sell them, and that's why you get that initial knee-jerk reaction. But as we've demonstrated, as you look further out, the longer the sell-off goes, the better gold begins to perform. And I like to argue gold is immune to the virus right now. Populations can get it, but gold is your currency of last resort.
Your price target, Jeffrey, quickly here on gold.
$1,800 an ounce, so lots of upside from here.
Mr. Curry, thank you so much. Jeffrey Curry with Goldman Sachs this morning from our studios in London. Negative 56 now on Standard & Poor's 500 futures. Dow futures negative 461. Actually, the equity has been very stable, but the backdrop here, John, again to four digits, a 0.61 handle on the 2-year, 0.6190 is extraordinary. To breach 0.60 would be a huge deal this morning.
Story of the year so far, isn't it? The collapse in global bond yields on Tuesday at 7, to Tom's point. We're down 10 basis points on a 10-year yield again. Equity futures down 55 from New York. This is Bloomberg Radio.
It was a Sunday morning when I jumped on the tube.
And decided to pop down to Greenwich via
a large indoor jungle.
And when I got there, I was captivated by a sparkling
scary dinosaur just standing there right in front of me.
So off we went to Wembley Park
to look at the colourful fish.
Tap into the wonderful world of off-peak London. Travel in zones 2 to 6 for £1.50. To the Mayor of London and TfL, every journey matters.
£1.50 is an adult off-peak pay-as-you-go fare for a journey not going via Zone 1 on Tube, DLR and most London Overground services. Always touch in and out with the same card or device to pay the right fare.
Fill the trolley with your favourite brands on rollback at Asda. A 38-pack of Fairy Non-Bio capsules was £8.50, now £5.75. A Lenore Gold fabric conditioner was £4, now £2.50. Big brands, small prices. Don't compromise. Asda. Save money, live better. Selected stores subject to availability. Lenore 1.925 litres. Ends 18th of March.
It's coming. Spring cleaning. And every speck of dust in your home will tremble, facing the most powerful suction of any cordless vacuum cleaner. The intelligent Dyson V11 from Curry's PC World. It senses and adapts to all floor types, and with up to 60 minutes runtime, dirt won't stand a chance. But you get a 1 in 10 chance of winning £250 cash when you buy any Dyson cordless vacuum. Heroes of the home at Curry's PC World. Terms and register at currys.win250.co.uk.
Welcome aboard Europe's 169th safest airline.
You were like my 169th biggest crush in school.
Your total body age is 169.
The number 169 never screamed glamour until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of March 2020. £3,311.25p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
Here we are at Longley Bottom Seahorse Races. It's Betty the Breeze up against Kids Go Free on First Choice Holidays. And they're off. Kids Go Free on First Choice Holidays has taken the lead, and Kids Go Free on First Choice Holidays is jumping ahead. Kids Go Free on First Choice Holidays is an example of the blatant product placement that's infiltrating this fine sport. And Kids Go Free on First Choice Holidays is making me run out of breath.
Ridiculous deals need ridiculous adverts. First Choice. Ridiculously good value.
Offer applies to first child only on selected holidays from 1st of May 2020. Conditions apply. That's all protected.
The moment you realise that radiator isn't warming up, it's freezing, and half the class are coming for a sleepover. The moment you realise you're covered by British Gas Home Care from £14 a month. That's just 46p a day, including parts and labour. Buy selected home care cover online by the 10th of March and get 1 month free. British Gas, here to solve. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
The first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
I think the U.S. is going in for a couple of years of very, very strong growth.
The deficit by early in the next decade will start to become a real problem for the markets.
Finance.
The consumer is really strong right now.
We don't realize how good times are now.
Investment.
The biggest problem that people have in investing in stocks is that they get out of the market.
It's not supposed to be easy. Anyone who finds it easy is stupid.
Bloomberg Surveillance with Tom Keene and Jonathan Farrow on Bloomberg Radio.
Good morning, everyone. John Farrow and Tom Keene with Lisa Bramwood. Thrilled you're with us this morning. It is another interesting day across markets and medicine. as well. There's no question on a world basis. There is more interest in this virus this morning. Terrific news flow there, redounding right over into economics, finance, and investment. We'll do the data here in a moment, but it's very important you understand no let up in lower yields. We're seeing that really across the board. Coming up, a must-listen interview on the behavioral sequence and process of what we do in crisis. Eric Friedman will join us from U.S. Bank. Really looking forward to that. John, I've got yen. Okay, I got futures negative 61. They've been there. They've been fragile. Up and down we go, the volatility. But I got yen, if my eyes don't fail me here, 106.94 is really testing yen's strength. That would be a big change, and that redounds right into the bond market.
You nailed it. In the bond market, 10's down 9 basis points, 0.96%. For anyone interested in where the intraday record low is, came March 3rd. That was 0.9043% to be precise. So still a handful of basis points away from hitting those levels, but certainly today the whole curve, 2's out to 30's, it's just dropping really, really quite aggressively.
Do the 2-year implosion here further down, we're going to get a 0.61 yield here in a moment, right near a record low. Does that just guarantee a rate cut at this March meeting?
It doesn't guarantee it, but what it suggests is it's a market positioning for it. The front end much more sensitive to Fed expectations, and Fed expectations still, for March 18th, even though they've done 50 basis points, still quite high.
We look at across all the yield markets today, and we look at oil. We just spoke with Jeffrey Curry of Goldman Sachs. He made global headlines across the Bloomberg terminal. Lisa, let me be honest, folks. I fell off my chair. Lisa held me and picked me up off the floor.
True story.
$40 with a tendency to 30, given bad news within inventory builds in the oil market.
A huge call, given the fact that so many companies, particularly in the shale patch, go out of business if you have $30, $40 barrel oil.
Well,
the key question here is, what can OPEC do? They already are promising cuts. It's not doing anything, especially not without Russia.
The John Plender article, a lengthy article, as you always get from John Plender in the Financial Times today, with Otmar Issing in there, the former chief economist of the ECB. And the basic tone, Lisa, to your wheelhouse, John, what you do on the real yield is forget about the full faith in credit quotes like a 2-year yield 0.6190. It's about the spread market, what you've talked about for months, Lisa, the buildup in leverage loans.
Yeah, and what you're seeing right now is a reopening of the investment grade bond market. Still some stress in the credit market on the riskier side. Meanwhile, over in Europe, I will say, just talking about this global push, money markets are pricing in about a 90% possibility that the ECB will lower its deposit rate by 10 basis points next week.
That's a deposit rate, but John, you say they're not going to do that? They're going to do other things?
No, I think they have other options outside of just rates. If they wanted to pull the trigger on something more targeted, they already have the TLTROs. Maybe they can refine them, reshape them to be very targeted towards a specific need. They also buy credit in the credit markets. They do that in the primary market, so they might be able to do a little bit more there too.
Do I look like Dr. Phil this morning?
You look fantastic.
Is it now time for a sensitive discussion?
You want a sensitive chat right now?
I'd like that.
We can do this with Eric Friedman. Folks, I'm kidding around, but folks, this is really, really serious. The emotion that you go through in times like this. Eric Friedman out of Colgate and Wharton writes just brilliant research notes about the emotion of staying in the market. He joins us now with the Chief Investment Officer for U.S. Bank Wealth Management. Eric, congratulations on a note. I kid about, Dr. Phil, and how are you feeling in this market? But you brilliantly lay it out with a phase 1, phase 2, and a phase 3 psychological approach that investors have to have. Let's start with the reaction phase. Are we in it right now?
We are, Tom, and thanks very much. I think that a framework is one of the more helpful things to provide investors right now, because to your great reporting, there's been so much back and forth and headlines come up every second, it feels like. So we think this 3-phase digestion process is typically what happens in episodes like this, recognizing that every episode is a little bit different. The first phase is a reactionary phase. When news comes out, buy and sells happen, more short-term algorithmic program trading really dominates, and that we've certainly had a bevy of news stories to react to. Phase 2 is more the liquidity phase. You touched on this in the prior interview about gold, and that's when people sell things they don't want to. Margin calls happen. Risk managers tap people on shoulders and say, you know what, you're actually a little too high in gross and net, and you got to sell something. And then finally, phase 3 is more of a fundamental or analysis phase, and that's when more clarity emerges. We see a period that right now, Tom, we really feel like we're still in phases 1 and 2 and will likely be there for a matter of weeks as opposed to a matter of days.
What is the clear thinking needed now to get to the fundamental phase?
The biggest factor, which is obviously very difficult to predict, is stability on the coronavirus spread. And in light of all the things that we're hearing, both empirically and anecdotally, until we see some stability, until we see recovery curves start to improve, not just in China, but also across the globe, as well as a more of a transparent process for how we're going to test, that's where we're going to be stuck in this phase 1 and 2 for some time.
Eric, why are we seeing so much more volatility in US equity markets compared to what we're seeing elsewhere? Up 3-4%, down 2-3%. Last couple of days have been crazy.
It has been, John. I think the biggest reason is because of positioning on the way in. We and lots of others felt that the economy was in decent shape, not great shape heading in and into this year, and a lot of people were just caught off sides in terms of being overexposed to risk. And as we like to say, everybody wants to be an aggressive investor when they see an up 30% year like last year. But heading into a bout of uncertainty, we just saw, whether you look at CFTC data, which you can look at Bloomberg or other resources, a lot of people were just caught off sides, and the first couple of bouts of volatility really dragged in that reactionary phase, if you will. So I think it really has a lot to do with positioning on the way in, and obviously the uncertainty about the path forward.
Can you take any signal whatsoever from what's happening in the Chinese equity market on the mainland right now? The CSI 300's positive again on the year. A lot of people think that's not much of a market, that it's incredibly distorted. Does it provide any signal whatsoever?
It's a great point. I agree with your comment on the prior segment that it is it's really low liquidity too. The institutional sponsorship is also quite low. So I'd say most things out of China right now, whether that's economic data, whether that's reports regarding disease containment, are certainly left with a bout of skepticism. And I think Lisa nailed it earlier. There's been a ton of stimulus that has crept in, not just on a headline basis, but also on more of a stealth basis. That's finding its way into the equity market. But again, it is not the most investable or sponsored market, so we're really not viewing that as an incremental positive at this point.
What's the pressure in bond yields at this point as they plunge to new lows? Is it lower or is it potentially higher?
We think it's probably lower right now, Lisa. And if you look, and for those who have access to a Bloomberg terminal, if you look at the forward curve, one of the more interesting things that we're seeing is most of the action out 3, 6, 9, even 12, 24 months is on the front end of the curve, not the back end of the curve. In fact, the back end of the curve, so 10s, 20s, 30s, that's a really, really sticky rate environment. Again, the forward curve can be wrong, but markets are really not anticipating a lot of movement towards the back end, which says to us there's a lot of sluggishness. We do think that the bias towards the front end will likely be a bit lower as people reach for yield. So that's really the dynamic we're seeing, is really a front end versus back end story.
What's your equity bond allocation now? Can you even make an intelligent decision on that?
Yeah, I think, Tom, the most important thing that we're saying on that front in terms of the equity bond allocation is to make sure your client's in the right one, which isn't a non-answer. But I'd say that through the abyss, if you will, that we're in right now, we do think that with a 10-year around 1%, it's very, very punishing for savers. So there is the desire to not move totally out on the risk curve, but really to try to think about total return and not just complete capital preservation. Again, this is an environment where people want to focus on capital preservation, but we have to invest through the other side of this as well. So right now, I'd say, Tom, there really isn't a definitive, massive overweight or underweight environment. This is when we're taking very, very small, very, very measured approaches to asset allocation. There will be a brighter day on the other side.
Was it like 5 days ago, or was it 15 days ago? We were all saying all the time. Things have changed.
Yeah, exactly.
I wonder about the election, because I remember, earlier this week, people were pointing to even the Democratic election. I'm just wondering real quick, do you think that that's going to play into the volatility or encourage people to go further into healthcare stocks, anything heading into November?
We do think, Lisa, this is certainly a time to evaluate healthcare and look more aggressively. This is something where there is still a very binary outcome on some of the subsectors, like managed care in particular. But the long-term demographic stories on things like biotech, on things like pharma, we have an aging population, which of course is living longer, and that is something that demographic is going to happen no matter what happens in the front end or the back end of the curve. So that is a spot that we think you can make money in over time.
Eric, great to catch up with you. Eric Friedman there, US Bank Wealth Management Chief Investment Officer, joining us on the markets worldwide.
It's just so much baloney on all this, and it's just great to see somebody actually walk through the behavioral process of fear, which is what we're talking about. I mean,
fear and greed.
It's fear and greed.
Because at the end of the day, you can't really make that much on bonds. So
what's the Faro greed meter look like right now?
The Faro greed meter, relative to what? Where we were yesterday?
Well, the markets. I mean, look at yen. I mean, who would have thought 106.91 on yen? And there we are. Look at Sarah Vellis's note out of Deutsche Bank on strong Swissy to 1.00.
We're clearly not out of the woods. We face recession in Italy, in Germany, likely in France too. That's the top three economies in Europe. We face recession in Japan. It's one of the biggest economies in the world. China's going to have a really tough front half as well. And there's some doubts around the United States if things get worse here too.
We welcome all of you worldwide, and we'll do some more nuanced data checks today. It's one of those days where, the 4 digits and, the noise that's out there. Really interesting. West Texas, 47.11. With the news in New York City, here's Michael Barr.
Tom, Lisa, John, thank you very much. Congress is rushing through a bill to fund efforts to contain the coronavirus. The measure passed in the House yesterday and is expected to pass in the Senate today. The Centers for Disease Control and Prevention says there are 158 cases of the coronavirus in the U.S. California Representative Raul Ruiz is a physician. He offered some precautionary steps to take to protect yourself and at-risk family members from the virus.
Wipe your counters in your desk with Clorox or Lysol, your phone especially. I would tell you that if you have an elderly parent or a family member who's sick, then take extra precautions to stay away from them if you feel like you're getting sick, and to make sure that every time you're around them, don't touch their face, wash your hands often so that you can protect them.
Supreme Court Chief Justice John Roberts delivered a rare rebuke to Senate Minority Leader Chuck Schumer. The justices are hearing a key case on abortion rights, a big test for President Trump's picks, Justices Neil Gorsuch and Brett Kavanaugh. Roberts accused Schumer of threatening the justices after the senator said this outside the Supreme Court during the hearing.
I want to tell you, Gorsuch, I want to tell you, Kavanaugh, you have released the whirlwind, and you will pay the price. You won't know what hit you if you go forward with these awful decisions.
Schumer says he was sending a political warning to Senate Republicans for pushing through the president's nominees. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Lisa, John.
Michael Barr, thank you. Fair to say some Democrats weren't too happy with what happened.
Interesting. I'm sure David Weston will cover this today, but this had bipartisan upset over the senior senator from New York's
Didn't exactly backtrack much either, did he?
No, I haven't followed it that closely, but I can assure everyone worldwide that was a bipartisan upset as the Chief Justice spoke out against the senator from New York. John?
Equity futures down 58 on the S&P 500. We're down by 1.86% from New York. This is Bloomberg Radio.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to it in the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Influential conversations from Bloomberg Television. Here's Paul Allen.
Now, despite President Trump's claims that his administration is ready for the coronavirus in the U.S., there is mounting concern that the government is grossly underprepared. So let's take a look at the situation now with Dr. Caitlin Rivers. She's professor of epidemiology at the Johns Hopkins Bloomberg School of Public Health. So, Dr. Rivers, thanks for joining us. What is your assessment of U.S. preparedness for this?
I'm pleased that diagnostic capacity in the United States has expanded this week and will continue to expand in the coming days. I do think that will mean that we will identify more cases in the United States, which might feel alarming, but it's really us just catching up to the current situation and getting a better understanding of that epidemiological situation.
Are enough tests available?
Yes, they are coming online. About half of state and local public health testing laboratories now have capacity to test, and I understand the rest of them will be coming online this week. That will bring us to about 10,000 tests a day if things run smoothly.
What's your best guess? How many Americans do you think actually are infected by this virus that we don't know about?
It's impossible to say, and that's why it is so important that we have testing capacity. And that's why I think we will see more cases in the coming days and weeks because there has been transmission likely happening that we haven't observed.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and futures are lower this morning. We go to the First Word breaking news desk for today's morning call. Here's Bill Maloney. Bill, good morning.
And good morning, Karen. That's right. U.S. futures remain under pressure with Dow futures down 500 points. S&P's dropped 60, and NASDAQ futures are lower by 162. The U.S. 10-year yield now at 0.95%. Gold is trading higher by 17. And Shanghai did rise 2% overnight, while European markets are posting losses of 1 to 2% right now. Back in the U.S. on the economic front at 8:30, initial jobs claims, as well as non-farm productivity, and at 10 o'clock, factory orders and durable goods orders. After the bell last night, Zoom Video beat estimates, and regarding earnings this morning, Ciena beat estimates. In deal news, HP rejected the exchange offer from Xerox, and 7&I is set to scrap the $22 billion Marathon Speedway bid. In other news, Southwest cut its Q1 unit revenues outlook due to the virus. And wrapping things up, State Street was cut to hold over at Deutsche Bank, while over at Goldman Sachs, Checkpoint Software was cut to sell. FireEye was raised to buy. Live from the First Breaking News Desk, I'm Bill Maloney. Karen?
All right, Bill, thank you. And to hear live breaking news over your Bloomberg, type squawk on your terminal, SQUAWK, and that's a Bloomberg Business Flash. Tom, John, and Lisa.
Thank you so much, Karen. Right now, we are looking at negative futures near their session lows, looking at a NASDAQ down about 2%. And this comes after an incredibly volatile period. This from Bloomberg Television's Peter Dioteris, talking about heading into this morning, the S&P was headed for its best week since 2011. And that directly followed its worst week since 2008. 6 straight day futures have moved up at least 2% up or down at some point. And Cameron Kreis joining us now. Cameron Kreis covering all things macro for us. Cameron, as you look at the volatility, can we just chalk this up to algos, or is this real money?
Probably an element of both. Certainly quant and algos have been a feature of it, and I think you could probably argue that they have, in a sense, destroyed some aspect of the liquidity available to sort of real people. It used to be back in the good old days when Tom had brown hair that if you wanted to trade a stock, you went to the New York Stock Exchange and there was a specialist who would make you a price. Now we have liquidity providers.
You should have a face cam for Tom right now. I will just say. Do you have a response for that, Tom?
I'm looking, I'm thinking, Cameron, I really want to go long Anaconda Copper here this morning, but is it 42 3/8? Should I plunge in?
Well, I mean, 30,000 shares. What do you want to do? But now we have liquidity providers who, in normal happy times, they're there, within an eighth of a penny, or shall I say 0.12 of a penny. But they're not obligated to make a price. So when things get hectic, guess what? They pull. So it becomes a bit like, the Hotel California or something. I think generally speaking, investors who are hedging with index product rather than getting out of positions. The correlation between short-dated moves in the stocks and the S&P 500 is very high with that of longer-term returns, which is not what you'd expect if people are sort of exiting their portfolios.
I want to point out with Cameron Christ coming on, as he always does, he moves the market lower. Cameron Christ moving the 2-year yield to record low yield. Right now I've got 0.6012. We'll touch a 0.59 handle here, John, at any moment.
Every now and then there is a rant that will happen on this program, and it's often about low rates and how they are not the solution, they are part of the problem. And once you go low, you stay there. And Cameron, I know that you've got that inside you today. This is frustrating for you, isn't it?
Well, I mean, listen, I understand why the Fed is moving, right? They have to be seen to make a gesture. And it's like, if you're the only adult in the room, you get called to solve whatever the problem is. If a kid starts setting the house on fire, your dad might not be a fireman, but, guess what? That's who you're going to call to get the fire extinguisher. I think that the Fed and other central banks are playing that role. But from a longer term perspective, it's hard to see how we escape this. Just because of the political pressures that are in play, because of the economic pressures that are in play, because of the demographic pressures that are in play. And it could, with aging societies who are sort of hungry for yield, obviously the lower the yield goes, guess what? The more principal you need to generate a given level of income in your golden year. So while the textbooks, Krugman and Obstfeld will tell you that lowering interest rates will pull demand forward. When society ages to the degree at which it has, and my theory is that these low rates pull savings forward, which is the contrary of what the orthodoxy would have you believe. So that the experience of Japan, for example, over the last quarter century would validate.
Well, that's called the 1930s, Cameron. I look at, I agree with all of your assessment there. It speaks to a new lower actuarial assumption. Folks, we just had a 0.59 handle on the 2-year yield. Absolutely extraordinary. Cameron, what does lower for longer mean right now?
Well, I think it means, it means everyone has to expect low returns on their investment portfolios moving forward. Is it going to spur the sort of inflation that all these central banks are chasing? No. If we're going to get inflation, it's going to be because of things like deglobalization and the fracturing of supply chains and the repatriation of supply chains to sort of higher cost jurisdictions. And maybe that's a good thing. In the sense that you're less perhaps subject to force majeure type events like we're observing now, and maybe your domestic workforce gets paid a little more. That's a good thing.
I'm glad you said it. That's really interesting. We're going to pick up on that theme. Cameron Christ, always with interesting perspective and mentioning force majeure. And John, that's a really interesting idea, this idea of a legal breaching or breaking of contracts, and to see it on a global basis, almost a pandemic force majeure, is interesting. You see it in the yield complex right now, and equity futures give way.
Gets my attention, gets yours, gets everyone's. We're down 9 basis points on 2. 60 basis points is your yield right now. Your record low, 2011, 14 basis points. Still some space there. But all-time lows, we approach them on a 10-year maturity. We're down 11 basis points on a 10-year at 0.946%. And just a couple of basis points away from record lows.
What's so interesting to me is we're not talking about inflation at all. And Kenneth Rogoff, the Harvard professor, wrote a column on Project Syndicate, where he was talking about how when you have a supply side shock, that is when you end up with inflation. And that is what we are seeing right now. And that is what the monetary policy makers cannot address.
I'm so glad you brought up that exercise, and it was the 1970s.
Exactly.
And Ken Rogoff, going back to that. We will have Professor Rogoff on at some point here, Lisa, but this is what Dennis Gartman's talking about, which is what Rogoff's talking about, which people in the 70s learned. Oops. And this is a raging debate. It's not to say that Professor Rogoff's correct, but it really needs to be considered as well. We consider futures negative 59, now negative 72. Dow futures negative 609, and of course that after the 1,000-point lift yesterday. The VIX up 5 big figures, 37.20, a 0.6052 2-year yield. More data checks. This is Bloomberg.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
This is a Bloomberg Money Minute. Tomorrow, the Labor Department issues its February jobs report, and ahead of those numbers, we have an update on private company layoffs. The outplacement firm Challenger Gray and Christmas says job cut announcements fell by 26% compared with the year before. Wall Street is headed for a drop at the open as investors react to the latest coronavirus headlines. Facebook has closed its Seattle office and is encouraging employees there to work from home for now after one of the company's Seattle contract workers was diagnosed with the illness. It's the first known infection within Facebook as the virus spreads in the region. Meanwhile, Microsoft, based in Redmond, Washington, is also encouraging people to work from home. Southwest Airlines becomes the latest carrier to feel the sting of the coronavirus impact on air travel, warning of a significant drop-off in demand, denting first quarter revenue. United and JetBlue are reducing their domestic flight schedules to adjust to a drop in demand. Gina Cervetti, Bloomberg Radio.
The market's in focus every business day. The P&L Podcast with Paul Sweeney and Lisa Abramowitz.
Are there some sectors that you want to have more or less exposure to?
What's behind this engine of gains?
Analysis of the day's Wall Street action.
The U.S. market looks relatively safe.
From Bloomberg Intelligence, Bloomberg Opinion, and influential newsmakers.
Ward McCarthy joins us right now.
P&L with Paul Sweeney and Lisa Abramowitz. Listen today on Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts. Sometimes the simplest method is the best one.
I think even I could figure it out today.
Balance of Power with David Weston.
You had a high estimate. It beat your high estimate.
Weekdays at noon Eastern on Bloomberg Radio. Bloomberg, the world is listening. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio. Your equity market, 1 hour away from the opening bell, negative, and at session lows, down by 2.38%, down by 74 points. Your 2-year yield south of 0.6% at 0.597%, and down a little more than 9 basis points on the day. The focus on the data, claims now, the payrolls report tomorrow. Let's get a snapshot and cross over to Vinny, Dow Dice.
Jonathan, jobless claims underscoring that we have a steady labor market in the U.S. 216,000 last week, little change from the prior week's 219,000. The report, as you note, sets the stage for Friday's monthly employment report. Economists surveyed by Bloomberg looking for a February gain, a respectable gain, 175,000, though less than the prior month. Also, some revised data on fourth quarter worker productivity. We're looking at a 1.2% gain versus a 1.4% gain. Again, one more time, jobless claims relatively steady, down a bit to 216,000. I'm Vinny Del Giudice, Bloomberg Radio. Let's go back to New York.
Vinny, thank you for that valuable report. And again, the 2-year yield 0.5973. John, within it, and I don't want to go into this, there's some noise here, there's some ratios that are squishy, but unit labor costs pulling back without revision. The statistic was 1.4%, and now we're looking at 0.9% coming in. And again, I'm going to be fascinated tomorrow by the wage dynamics, which gives cover to Chairman Powell if he needs cover to go another 25
to keep
beeps.
Things loose and cut again, maybe. For me, I don't want to gloss over initial jobless claims. If we can keep doing this week after week, it's going to preserve some confidence that things are okay.
Yes, absolutely.
That we're getting through this economic shock. The small and medium-sized enterprises aren't starting to lay off people. Claims looking rock solid still. Let's bring in Neil Dudder, shall we? Renaissance Macro Research Head of Economics. He phones in on the data. Your first take, please, Neil.
Yeah, I mean, I think as you mentioned, I mean, this is basically the claims data through the end of February. We know that things are holding up. I mean, look, I mean, you want to be going into a shock with your best foot forward and on strong footing. And I think the U.S. economy was. I mean, basically towards at the end of February, I think things were looking pretty good for the U.S. economy. I mean, you look at your own Bloomberg Economic Surprise Index. I mean, that thing basically had a V-shaped recovery to start the year, right? So that would suggest that economic conditions, over the first 2 months of this year have been generally healthy, and that's that's a function of strong employment growth. But even some of the things that we'd been worrying about last year had started to kind of unwind, right? So we saw a pickup in core capital goods orders, for example. Obviously, the housing market is strengthening quite significantly. We're seeing stronger construction activity, refinancing activities picking up, purchase applications are rising. I think by the before the virus kind of hit, and we had clearly mounting evidence of sort of self-quarantine now. I think things were looking pretty good.
What does an economy do in self-quarantine? Oh, optimistic one.
I mean, I think growth kind of slides to zero, right? I mean, it's essentially sort of a large natural disaster. I mean, I guess the way to think about it is this. I mean, at least this is how I'm thinking about it. So, if you look at Atlanta Fed, Q1 GDP tracking, it's around 2.7% for the first quarter. So let's say, through the end of February, growth was 2.7% for the first quarter. So what does that mean, given where the consensus is? The consensus is around 1 to 1.5%. That would imply that March has to come down at an annual rate of about 2%. So you basically have a 2% shock annualized in March to GDP growth. You look historically when you've seen monthly declines in growth of that magnitude. It's typically around significant sort of natural disaster type events, right? We remember very recently the 2014 winter. Remember, the Fed even talked about that in their statement, for crying out loud. We saw it then. We saw it after Katrina. We saw it after Hurricane Andrew. So I think the way I'm thinking about what we're seeing is the Fed has basically treated what I think is going to be a very significant natural disaster as a prolonged and pronounced economic and financial market event. And my sense is that the economy will come back sooner from this than the rate cuts will be reversed. And so I think, we kind of take our lumps in the spring, and we're going to find out in April and May just how bad March was. And then by then, will we still be talking about this? My hope is not. And I think, given the fact that we're seeing the Fed easing, we're seeing coordination seemingly from global central banks. Whether it's the Bank of Canada yesterday with a 50 basis point move, the Aussie Central Bank did it over the weekend, and the BOE, ECB. I mean, they're clearly gearing up to do something. So you have coordinated central bank action. You're treating a natural disaster like a broad economic and financial market crisis, which I don't think it will be. And I think that sets us up for, pretty potential powerful tailwind, let's say by the end of the third quarter.
I'm having an Usher love is in the club moment. Because as Neil's talking, I'm looking at the 90-day the LIBOR. I haven't done that since February of 2008, when Usher and I were grooving to Lovin' is in the club.
You were in the club?
Yeah.
Listening to Usher?
Yeah. Slow ride, it was killing it.
Okay, Neil, I'll do my best to continue this conversation, buddy. I hope you're right about the trajectory for this economy. One thing that I'd love to get from you, though, you're a brilliant economist, I'll say that for you. You also really understand how the data's put together. The lengthening delivery returns, the lengthening delivery times, rather, in PMIs are really distorting some of the headline numbers worldwide at the moment. And I'm struggling to get a decent read on where we actually are. Where are we, Neil?
Well, I mean, I think manufacturing basically puked in February and March, particularly in Asia, to a lesser extent. I mean, right now, when you look at the PMIs, it's a gravity model, right? In other words, when we think about gravity model of trade, you trade with the countries closest to you. It's a gravity model with respect to the virus. The countries closest to where this originated are doing the worst in terms of PMIs, right? I mean, Japan, South Korea, broad swaths of EM Asia. The one exception, actually, is India. I mean, India is doing quite well. I mean, we haven't really seen, much of this infect India, which being, from that diaspora isn't especially surprising. That's another discussion.
Well, Neil, but I want to talk about what your assumptions baked in here are, because so far you're saying that we're going to see some kind of recovery, that we've got momentum heading into this, but the virus hasn't even spread that much in the United States. Right now we are getting confirmation of another couple cases in New York City by New York Times. I mean, at what point can we look at the data and say it's actually reflecting the true scope of the virus's impact?
Well, we're not going to, we're not going to know that really until April, right? I mean, you're going to see some sort of survey measures come out. I mean, in the middle of the month, we'll start to see the regional PMIs come out for New York and Philadelphia. You'll see it then. But in terms of the totality, I mean, you have to look. I mean, we're all sort of flying blind here. I mean, one of the things I've been telling our clients to look at is the Energy Information Administration's data on just sort of, weekly, jet fuel demand. You can see that airlines.
Yeah, it's all come in.
You've seen that come in quite substantially. I mean, if you look at what we've done over the last 8 weeks, I mean, we've seen a drop off in jet fuel demand at a pace we haven't really seen since the global financial crisis and right after 9/11.
I mean, Neil, split the difference on Brent crude, $50.79. Jeff Curry talked low 40s, even high 30s on Brent crude, given inventory issues, et cetera, et cetera. Split the difference. If we get 45 Brent crude, 42 West Texas Intermediate, what does that do to the U.S. economy?
I mean, these days oil issues are largely about rotations of growth within the country as opposed to net plus, net negative. So, I mean, what you're going to see, I think, is a rotation of income away from places like Texas and North Dakota towards the coastal regions, which, I think is coming in an opportune time because it's really the coastal regions that have been feeling, most of the coronavirus impact. I mean, this is LA, San Francisco, Seattle. I mean, that's what we're talking about here. So, and the other thing I would say is that, look, I mean, I try to stay on the sunny side of the mountain, as you know. But, look, I mean, one of the things people haven't really been paying attention to is the fact that we got a significant ramp up in employment coming because of the census. It's coming at an opportune time. I mean, I know that it's temporary, but it's coming at an opportune time. So just something to keep in the quiver.
To the jobs report tomorrow, Neil Dutta, thank you so much. Renaissance Macro as well. John, you and I are looking at the 2-year yield. I would suggest there's a bid on note prices this morning.
I'd suggest there is right the way through the curve. We're down 10 basis points on 2s at 0.59%, down 11 on 10s. Your 10-year maturity yield there, 0.944. Wasn't so long ago the 10-year was at 160. The 30-year is now 1.598%.
I've been doing this for a few years. I've never seen the pulsing of a screen like this. This is different than 07. It's different than Bear Stearns Lehman. It's different than this, that, and the other thing. I'm not saying it's worse. I'm saying it's a unique screen.
Well, it's a unique shock as well. It's a unique shock that we've got to grapple with too. Equity futures down by about 71. We're off by 2.3%. So we get you some news, some headlines worldwide. We can do that from New York with Michael Barr. Good morning, Michael.
Good morning, John. Lisa, Tom. New cases of the coronavirus are popping up in the U.S. In New York State, a man in his 40s and a woman in her 80s tested positive for the virus, bringing the total number of cases to 13. In New Jersey, Governor Phil Murphy says a man in his 30s is hospitalized after he tested positive for COVID-19. Texas health officials say they have their first possible case of coronavirus. The patient, a 70-year-old man from the Houston suburb of Fort Bend, had just returned from traveling abroad when he developed symptoms. The CDC is working to confirm the diagnosis. Director of the Fort Bend County Health and Human Services, Dr. Jacqueline Minter, says it was only a matter of time before a Texas case was diagnosed.
This case was associated with travel. At this time, we still have no evidence of community spread of COVID-19.
The U.S. death toll from the coronavirus has risen to 11, with the victims succumbing in California. Chinese President Xi Jinping's planned state visit to Tokyo has been postponed because of the virus. The virus is also prompting authorities in Italy to close schools nationwide until March 15th. The struggling British airline Flybe has collapsed, leaving passengers stranded. All flights are canceled. The final straw, the impact of coronavirus on passenger numbers. Health Minister Edward Arger.
Our thoughts are very much with the 2,500 employees whose jobs are at risk now, and of course with passengers.
Customers are urged to make their own alternative travel arrangements. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Tom, Lisa.
Michael, thank you. What a tough time for the travel and leisure industry. The data is going to be in focus the next couple of days. I just wonder how many people feel like they can take a long breakfast tomorrow morning, and skip the payrolls report that comes out tomorrow.
I'm looking at wage growth there.
Believing that it's somewhat dated.
Yeah, I haven't said this in years, and wage growth to me tomorrow is just absolutely vital. So no ifs or buts about it. I'm sure all at the Fed will be looking for justification off that trend in wage growth.
I would go to Neil Dutta of Renaissance Macro, who was talking about the trend going into the growth scare. And you want to know that your economy is on a good footing. And the US economy going into this growth scare appears to be, at least, on a decent footing, looking at the data that's come out so far. In your market this morning, good morning to you all. Let's get you some price action, shall we? Equity futures are down by 2.31%. We are negative 72 points after yesterday's big gains on the S&P 500. Closed out the session on Wednesday up by 4.22%. Your bond market, though, is where the headlines are once more, down 10 basis points on a 10-year yield at 0.95%, a handful of basis points away from all-time lows there, and a drop below 0.6% on a 2-year yield gets, I think, everyone's attention, down 10 basis points on the day so far. Much more still to come on Bloomberg Surveillance as we count you down to the jobs report tomorrow from New York City. From all of us, good morning to you. This is Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Close to record low mortgage rates, sparking a big boom in mortgage refinancing, and it could also help trigger some home buying this spring, especially when it comes to homes seen as more affordable. Rob Urban is reporter for Bloomberg News.
It probably will help strengthen the demand in the spring selling season. They call it the busiest time in U.S. real estate for domestic buyers and for more sort of average home buyers who might have been concerned that the direction could be up.
The Mortgage Bankers Association says purchase applications are up about 10% from a year ago. That's as the average borrowing cost drops to the lowest in more than a decade. And the National Association of Home Builders says buyer traffic last month was some of the strongest since all the way back in 1998. And this is pushing expectations for strong sales this spring higher, at least right now, in spite of coronavirus fears. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
Lunch? You don't get any lunch unless you've earned it. Give me 20 squats, 20 burpees, and 20 crunches. Then we'll see about that ham and cheese baguette.
Or leave the motivation to Vitality. With our life insurance, you could save up to 40% on a Garmin fitness watch for a little nudge to exercise a bit more. Now that's real motivation. Search Vitality Garmin. Life's better with Vitality. Variable discount. Postage and packaging terms and conditions apply.
TuneIn's your destination for college basketball, and it's free.
Down the right side of the lane, jumper up and go.
This week we have a must-hear game. North Carolina at Duke.
2 for the win. No, tapped up by more. And it is the Blazers. More bakes it in.
This Saturday, tip-off is at 6 p.m. Eastern.
Kimball right of the lane against the SU zone to Warren.
With college basketball on TuneIn, you can hear every call from games around the country live. Search college sports to listen free today.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are sinking alongside shares in Europe as market choppiness persists while investors size up government efforts to contain the coronavirus outbreak. Treasuries are rallying along with the yen and gold. Oil is lower as OPEC ministers took a gamble, recommending a large production cut without first overcoming Russian opposition. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 64 points. Dow futures down 540. NASDAQ futures down 182. The DAX in Germany is down 1.9%. 10-year Treasury up 30 seconds. The yield 0.95%. And the yield on the 2-year at 0.59%. NYMEX crude oil is down 0.33% on 14 cents at 46.64 a barrel. COMEX gold is up 0.6% or $10.50 at 16.5360 an ounce. The euro 1.1188 against the dollar. The yen is at 106.84. And Howard Ward at Gabelli Funds says stocks may go lower.
I don't think the overall market has yet come to the conclusion that the earnings estimates on the S&P this year
are not going to be $175, which was the expectation going in. They're not going to be $172, which is where some analysts are right now. They're probably going to be $165, which will be flat, and they might very well be negative.
And that's Howard Ward at Gabelli Funds. And filings for U.S. unemployment benefits fell last week, underscoring a healthy labor market, even as concerns mounted about the impact of the coronavirus on the economy. That's a Bloomberg Business Flash. Tom and Lisa.
Thanks so much. Greatly appreciate that, Karen. Greatly appreciate that. Lisa, I wrote an essay for LinkedIn, which is a great privilege to do that for Dan Roth and Victoria Taylor and the team over at LinkedIn. And, I'm doing stuff like people ask me all the time, how do you do the reading? How do you know what not to read and all that? And I did this one on mathematics. And to make a long story short, it was that whole angst of you're out in the business world and you sort of remember doing your math like long ago and far away. And how do you get back in the math game gently? And that was a bunch of books and all that. And 2/3 of the way through the essay, I said, you have to read people who do math inherently in their work. And one of the best in the world is James Bianco. He is just brilliant of how he pulls in charts and does them. And usually it's in what's called a semi-log basis. I'm not going to go to the math right now. We don't do math on Thursday on Bloomberg Surveillance. But I was thrilled to mention Jim Bianco. His LinkedIn feed is outstanding.
Jim Bianco, one of my absolute favorites, president and founder of Bianco Research, joining us now from Chicago. And Jim, I'm looking right now. We've been all watching two-year yields plunge to session lows, the lowest level since 2016, 0.5855%, because Tom likes to break it out to four places. And I'm looking right now at the WERP screen on the Bloomberg terminal, pricing in almost 4 rate cuts now by the end of next January.
4 from where we are now, not
Correct.
Including the 2 we just had.
The implied rate 0.298% by January 27th, 2021. And I'm trying to understand, Jim, how quickly do we get to zero?
Maybe 2 weeks. It could be that quick. Right now, your WERP screen, which is your world interest rate probability screen, is telling us that there's going to be a 50 basis point cut on March 18th. And that would take us down to 0.5%. Now, without getting too into the weeds, the Fed's got another problem that they didn't anticipate. As they announced that they're going to cut rates, and as the market expects that they're going to cut rates, people that have their money in overnight money like overnight repo or one-day maturity type of commercial paper and stuff are saying those rates are going to fall. So I'm going to move out to 3 and 6 month paper to try and mitigate my reinvestment risk. I'll take that higher yield and I'll lock it away for 3 months. So what's happening is money or liquidity is being drained out of the banking system because it's leaving the banking system and going to longer securities. And that's why you're seeing this big jump in the amount of repo that the street is asking for. If the Fed wants to drag this out and just say, well, we'll cut 25 or 50 in March and maybe 25 or 50 in April, there'll be no money left in the banking system.
Wait, this is really important, Jim. Are you saying that the Fed needs to cut rates by 50 basis points on March 18th, or else we are going to have a fundamental plumbing problem in the financial system?
I'm going to go you one step further. We have a plumbing problem in the financial system right now. And it is being covered by the Fed's new facility that they've put in place. But the street, Wall Street, is asking for more assistance than the caps that the Fed has put on it. Today, they said that they would offer $20 billion of what's called 14-day term repo. The street asked for $70 billion of assistance, and they only got 20 in help right now. So the reason is all that money is leaving because it knows those rates are going to go down. And it's going to longer-term securities. And if the Fed is going to drag their feet in cutting rates, well, we'll cut 25 this meeting, 25 next meeting, this is going to create a bigger plumbing problem. So if you're ultimately thinking about going to zero by the second half of this year, do it in 2 weeks.
Well, just because of time limitations today, Jim Bianco, and this is so important, do you find an efficacy in alternatives to rate cuts, or is rate cuts the blunt instrument that only works?
Well, rate cuts is the blunt instrument that they work. The only other instrument that they have that they could use at this point would be to expand their balance sheet, which is what we now know as QE. I wanted to say traditional QE. I guess that's what it's become now. It's more traditional. I don't think negative interest rates or any of those other things would be very effective. In fact, those would be very counterproductive at this point. So the Fed's got kind of two targets that they're looking at. They're looking at what this virus means, what we're fearing it means for the economy in 2, 3, or 4 weeks, widespread shutdown, disruption, and the fact that they are cutting rates. That act is creating a plumbing problem on top of everything else. Plumbing problem is being handled for now, but just for now. It doesn't mean that they've got it permanently solved.
Jim Bianco, thank you so much. Too short a visit. We look for a much longer visit next time. Mr. Bianco in Chicago. Greatly appreciated. Futures a negative 67, Lisa, and yields come in. That 2-year yield, 0.5894, right buttressed up against the low of 0.5855.
Here's what I'm struggling with. If the Federal Reserve cuts for another 50 basis points at their March 18th meeting, how do they do that while also signaling calm, while also signaling the same kind of thing that they've been saying? The U.S. economy is strong, that it can withstand the pressures of coronavirus. Zero interest rates does not scream of withstanding a crisis.
The people in support of the Fed would suggest, Lisa, that they will message calm by catching up with the events. And this is a hugely important philosophical central bank issue. Richard Timberlake of Georgia is definitive on this, as was Alan Meltzer. And this is Latin jargon, ex post ex ante. I'm in the camp, by definition, Federal Reserve always follows the news. The idea that central banks get out front of markets, there's no evidence of that within any history of banking. So they're going to follow the news, and then with that rate cut, provide comfort. That's the general theory.
Well, let's see if they can provide comfort, because we are seeing futures negative today after yesterday's rally, taking it to the lowest points of the session, and we've got yields plunging to their lowest also as people move their expectations for global growth lower, profit revisions from a number of companies, a sense of gloom today. This is Bloomberg Surveillance.
As we move towards 1 trillion connected devices, compound semiconductors made in Wales are set to power the 4th industrial revolution. Wales also has one of the largest cybersecurity ecosystems in the UK and a thriving fintech industry. 8 universities are producing a talented tech workforce for the future, and our devolved government has a strong vision for growth. If you're looking to expand your business, go to tradeandinvest.wales. This is tech. This is Wales.
A change is coming. Millions of people across the UK are realising that if their broadband's out of contract, they could be out of pocket. So it's time to switch and save with Vodafone Superfast Broadband for £21.95 a month. Join the Great British Broadband switch today. The future's exciting. Ready? Vodafone.
18-month contract subject to credit check. Superfast 1, 73% of customers receive sync speeds above 35 megabits per second. Source Ofcom fairer pricing. Price may change during your contract. See vodafone.co.uk/broadband.
Matt Letizia, what did you make of that performance today?
Well, it really was a game of two halves, to be honest, Jeff. Leicester came out in the first half really...
Letiz?
What's up, Jeff?
Run for it!
What the...
Move over, football. Cheltenham coming through. And Sky Bet are on the charge, with money back as actual cash, up to £10 if you lose on the first race of the festival. Sky Bet, that's betting better. Applies to first bet on first race at Cheltenham on losing singles and win part of each way singles only. Money back as cash, free bet stakes excluded, eligibility restrictions, T's and C's apply. 18 plus, begambleaware.org.
This ad is made from 100% recycled commercials. Just like Smart Water's
all new
bottles are made from
100% recycled
plastic.
What's that number again?
100%. Every Smart Water bottle is made using recycled plastic, and because it's still
100%
recyclable, the plastic will be used again
and again.
Smart Water, now in a 100% recycled plastic bottle. Label and cap 100% recyclable, but not made from recycled plastic. Yet. We're working on it.
WW Weight Watchers Reimagined have a new customised weight loss programme, My WW, where no foods are off limits. Just fill out a simple assessment and get matched to a plan that suits you. You love eating carbs, cooking at home, or eating out? No problem with this new customized plan. Discover which new MyWW plan can make losing weight easier for you. Get in shape for summer with 6 months for the price of 4. Offer ends 7th of March. Subscription fees and conditions apply. Mainland UK only. See website for details.
Fill the trolley with your favourite brands on rollback at Asda. A 38-pack of Fairy Non-Bio capsules was £8.50, now £5.75. A Lenore Gold fabric conditioner was £4, now £2.50. Big brands, small prices. Don't compromise. Asda. Save money, live better. Selected stores subject to availability. Lenore 1.925 litres. Ends 18th of March.
The moment you realise that radiator isn't warming up, it's freezing and half the class are coming for a sleepover. The moment you realise you're covered by British Gas Home Care from £14 a month. That's just 46p a day, including parts and labour. Buy selected home care cover online by the 10th of March and get 1 month free. British Gas, here to solve. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
The good news is the economy is strong. The bad news is the economy is strong.
Financial crises take a really long time to recover from.
Finance.
The strong job market's pulling people back in.
You can't have for very long, monetary union without a fiscal union.
Investment.
What we preach is extreme diversification.
It's hard to have sustained productivity without capital investment.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene. Welcome to Bloomberg Surveillance to get the market open here in 30 minutes. All sorts of good conversations today. Jean-Claude Trichet was on fire earlier this morning, 3-4 hours ago, speaking out of Paris. Just absolutely extraordinary on his framing of the choices of central banks forward, the Fed, of course, into March, and of course, ECB. Mr. Bailey speaking in London today as well, the next governor of the Bank of England. Then you bring it over to the market news, Paul, and just extraordinary. And I guess the headline today's got to be the further compression in yields. A 2-year yield, 0.5835, new recent lows.
Yeah, extraordinary, Tom. And the 10-year back down below 1% here. So what's striking here is just the volatility we're seeing in financial markets as I think investors try to get a sense of the breadth and scope of this crisis, and it seems like it's kind of tamped down a little bit in China, so we get a sense of timing there. Yeah. But it's now the international expansion here, and what will the central banks do, and how coordinated will they be?
And the conversations have really been rich, folks. I thought Howard Ward of Gabelli was just fascinating about how he's very, very cautious, but nevertheless wants to be opportunistic in healthcare. And of course, really, for those of you just tuning into the markets in your American morning, I can only say the viral news has been at a new level today, Paul. And there was that single HSBC headline where they had one case at HSBC offices in London, and
right.
They, did some form of evacuation.
Yeah, partial evacuation there. So we're seeing the headline risk is obviously front and center here for this market.
And the markets are stories of corporations, and that leads us to Mr. David Wilson with futures, negative 66. David?
Well, let's start with Apple, Tom. It's down 2.5% in early trading. Replacement iPhones will be in short supply for as long as 2 weeks. That's according to Apple Store employees. They said the company told technical support staff about the shortages. This is all tied into the effect of the coronavirus on supplies. Apple didn't respond to requests for comment. Microsoft's down 2.5%. The software maker recommended that all its Seattle area employees who can work from home do so through March 25th because of the coronavirus. Microsoft has about 54,000 workers in that area. And Facebook's down 2.5%. The social media company said a contractor in the Seattle area was diagnosed with the coronavirus. Facebook closed its Seattle office until Monday and encouraged employees in the area to work from home the rest of the month, so a little bit longer than Microsoft. You look at the banks, given what's going on with Treasury yields falling, they're taking a hit in early trading. Bank of America's down 3.5%. Citigroup, JP Morgan Chase, Wells Fargo, all lower by 3%. And then we turn to the airlines. Southwest down 2.5%. The carrier cut its revenue forecast for this quarter because of lower demand tied to the coronavirus. Yesterday you had United Airlines scaling back flights, and that stock's down 3.5%. And on top of that, American and Delta both lower by 4%. And you see it with the cruise lines as well. Carnival down 5.5%. Royal Caribbean down 3.5%. And the hotel chain Hilton Worldwide also down 3.5%. ExxonMobil's lower by 3%. The energy producer disclosed it's slowing the pace of its flagship shale project in the Permian Basin, which covers West Texas and New Mexico. The move will last through next year. Exxon's having to adjust to lower oil and gas prices. The Marathon Petroleum's down 6.5%. People familiar with the matter said a proposed $22 billion sale of the company's gas station chain Speedway has been scrapped. They said the Japanese owner of the convenience store chain 7-Eleven walked away from the deal. And speaking of deals, it got Keurig Dr. Pepper down 2.5%. The beverage company sold $1.1 billion of shares for its two largest holders, JAB Holding and Mondelez International. The sale amounted to a 2.8% stake. And Zoom Video, this is a company that's really taken off lately because of the coronavirus, keeping people at home. The shares were up as much as 73% since late January. They're down 6% today, even though their latest quarterly earnings and their forecast for this quarter beat estimates. And I'll give you an up note to end this. Please. Marvell Technology up 7%. The chipmaker's fiscal fourth quarter earnings and revenue beat projections. Marvell's first quarter profit forecast also came out ahead.
Very good. David Wilson, thank you so much. Paul and I want to speak to Arthur Levitt here, the former chairman of the SEC and also the executives over many different companies, Shearson and others, and the American Stock Exchange over the years about the moment that we are in. Arthur, this is not 1987, but I have the clearest memory of you. I believe you were with the American Stock Exchange at the time, speaking to the nation with others at the time about a crash, and that was momentary. Compared to what we're in right now, wouldn't you say that the 87 recovery seemed to have been abrupt and short-lived?
Yes, it was abrupt and it was short-lived. I don't know that I compare this period of time with that. Other issues have borne upon what's going on today.
It's absolutely extraordinary. Professionals were 1957, or there was a time in the 60s as well. Just Arthur, your thoughts on the news flow, not only the obvious damage to tourism, but the news flow that leads to these interest rates that harken back to the 1930s.
Well, I think the news flow tends to feed off what's going on at a point in time rather than leading. And I think what we're seeing today, for instance, it looks like the Supreme Court is going to weaken the Consumer Financial Protection Bureau, and that too is related to the news flow because under the legislation, the chairman of that agency can be removed only for inefficiency or malfeasance in office. So the question boils down to how far conservatives want to go in embracing the theory that almost everyone who exercises authority in the executive branch is answerable to the president.
So, Arthur, just quickly here, just get your sense. I mean, you've lived through so many cycles, so many crises, so many market moves. Does it feel like the federal government, the Federal Reserve, the other folks that take a look at the markets every day, do you feel like they're doing as best they can here at trying to deal with this volatility and this sell-off and this coronavirus risk to the markets?
Yes, I absolutely do. I couldn't fault any of them for what they're doing. I think that an issue here is whether the president has the ability to fire the CFPB, Consumer Federation Protection Bureau's director, at will. And I think consumers have an interest in this. I think that the president probably can be able to fire him at will, but I think that's a matter up for debate. Chief Justice Kavanaugh maintains his view that the for cause removal provision could be stripped from the legislation without crippling the agency, which is another way to go.
Arthur, thank you so much. Arthur Levitt with us this morning, too short a visit. He's former chairman of the Securities Exchange Commission. Futures were negative 40. They're now negative 75. Dow futures negative 630. That puts the level at 26,330. With the new volatility, Paul, you go up 1,000, down 1,000. I guess you're at the same spot.
Same spot. And, this is the volatility. I'm going to be interested to see kind of the performance we get from the hedge funds, Tom, when they start reporting performance. Is this the time when active managers can shine? Is this the time that hedge funds can, do exactly what the name says, hedge and get better performance in these volatile markets?
Just one stock, and of course one visible, and of course Dave Wilson mentioned it. Apple was 7% under its record high this morning. I guess it's down 2% now, rounded out to a correction, negative 10%. The VIX is 37.54. If you said to me, Tom, give me a VIX of 37 on the edge of 40, I'd say Apple would be down 18 or 25%.
Yeah.
Without kidding.
Yep, no question.
And it's not, it's just bizarre here, some of the dynamics.
I think some people might be trying to look ahead a little bit, trying to look past this, sensing that, maybe we've got several more weeks to go and, maybe, a little bit more than that. And then at that point, top-line growth, that organic top-line growth, and a secular bull stories, those are the ones you want to own. So, I get a sense that people, when we see these big moves in the market like yesterday, people trying to buy names that are a little bit cheaper.
When I go to the yield complex now, we'll talk about this in the jobs day. Right now, the two-year yield making all the headlines. Wow, 0.56 handle, 0.5697. Just simply, it's come down from the middle 0.62 level, right straight down 0.5737. Right now, the 10-year yield is in a solid 11 basis points, 0.94. And a 30-year bond, remember 2% was like a Dow 10,000 benchmark for the 30-year bond, 0.159 on a 30-year bond in 11 basis points. So yields lower, yield compression today. With our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. The U.S. death toll from the coronavirus has risen to 11. California officials northwest of Sacramento say an elderly man who tested positive for COVID-19 after returning from a San Francisco to Mexico cruise has died. Federal health officials are expanding testing for the fast-moving outbreak. University of Alabama Infectious Diseases Director Dr. Jean Morazzo said not to expect a vaccine anytime soon.
As Dr. Fauci from the NIH emphasized very strongly over the past several days, we likely will not have a big vaccine trial until at least a year from now.
Meanwhile, New York State has reported 2 more cases of coronavirus, bringing the total in the state to 13. New Jersey has reported its first case of the virus. Florida Democratic Representative Val Demings is endorsing former Vice President Joe Biden for president. She says Biden has proved himself to be a leader with integrity.
The best indicator of future performance is to look at past performance. And if we look at Vice President Biden's record, he has been there in the trenches fighting for those things that are important to the American people. So I'm excited about this opportunity. I'm excited about the upcoming primary in Florida.
Demings is the 23rd member of the Congressional Black Caucus to endorse Biden. Chief Justice John Roberts is criticizing as inappropriate and dangerous comments Senator Democratic leader Chuck Schumer made about Justices Neil Gorsuch and Brett Kavanaugh. Schumer, speaking outside the Supreme Court about a key abortion case, told the justices, "You won't know what hit you if you go forward with your awful decisions." Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Paul, Tom?
Michael Barr, thank you so much. Futures continue to be red. We're certainly a risk-off day after that surge we had in equities yesterday. S&P off 72 points. That's about 2.3%, Tom. Dow off about 600 off its lows, but still off about 2.25%. And NASDAQ, again, off about 196. And the Treasuries, Tom, as you called it out earlier, the 2-year, 0.57%. And the 10-year, that's up over 1 full point, back down below 1% at 0.94%, Tom, on your 10-year.
The European curve confirms that, but U.S. certainly coming in more of the negative yields. A 2-year yield in Germany, a stunning negative 0.85%. I want to make clear the correlations are not two-year yields. Stay with us.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Incredible. This piece is my favourite. Stunning. I can't look away. Who's the artist? It's clearly a Costa. Oh, look. There's the artist now. What do you call this masterpiece?
We call it our velvety smooth flat white.
Crafted with the world's best beans and finished with a floret hand-drawn by expert baristas, the flat white at Costa Coffee really is a work of art. Visit the nation's favourite coffee shop and enjoy one today. The question, what is your favourite branded coffee shop, was asked. See costa.co.uk for full details.
If you're going to have NHS dental treatment, don't assume you can claim it for free. Not all benefits entitle you to free treatment. And if you claim when you're not entitled, you could face a penalty charge of £100. Plus the cost of your treatment. Thankfully, the NHS Eligibility Checker will help you find out if you can claim for free. Then next time you're at the dentist, you'll know exactly which box to tick. Search Check Before You Tick online today.
Fill the trolley with your favourite brands on rollback at Asda. A 38-pack of Fairy Non-Bio capsules was £8.50, now £5.75. A Lenore Gold fabric conditioner was £4, now £2.50. Big brands, small prices. Don't compromise. Asda. Save money, live better. Selected stores subject to availability. Lenore 1.925 litres, ends 18th of March.
Today at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. And U.S. stock index futures are sinking alongside shares in Europe as market choppiness persists while investors size up government efforts to contain the coronavirus outbreak. Treasuries are yet rallying along with the yen and gold, and oil is little change as OPEC ministers took a gamble, recommending